Welcome to the Bitcoin Treasuries digital conference presented by Salt Lending for March 19th, 2026. Today, we're bringing together leaders, investors, operators, and analysts from across the Bitcoin Treasury ecosystem to explore one of the most important shifts happening in global finance, the rise of Bitcoin as a corporate treasury asset. Over the past 6 years, we've seen a growing number of companies adopt Bitcoin on their balance sheets. From public companies to private firms, a new financial strategy is emerging. One that combines traditional corporate finance with the long-term monetary properties of Bitcoin. Throughout today's conference, we'll be speaking with executives, investors, and industry experts about the strategy behind Bitcoin Treasury adoption, risk management and corporate governance, capital markets and Bitcoin-backed lending, and how companies are thinking about Bitcoin as a long-term reserve asset. A big thank you to our presenting sponsor, Salt Lending, for supporting this event and helping to move the Bitcoin financial ecosystem forward. Before we begin, a quick disclaimer. The content shared during this conference is for educational and informational purposes only. Nothing discussed by our speakers should be considered financial, investment, legal, or tax advice. Please do your own research and consult with professional advisors before making any financial decisions. Stay with us. You didn't build a big... All right, we're live. Welcome to the March 2026 Bitcoin Treasuries Digital Conference. I'm Tim Kotzman. Myself and Ed Julien are going to be hosting the conference today, and I'm very excited to bring to the stage none other than, wait, I've got an intro here. British Hodl is one of the most unfiltered voices on Bitcoin Twitter, known for calling things exactly as he sees them. He's especially vocal on Bitcoin treasury companies, capital flows, and who's actually winning in this market. British, good morning or maybe good evening. How are you?
I'm good. How are you? Can you hear me?
Yes, sir. Loud and clear.
Yes, sir. Loud and clear. Perfect. How's it going over there? It looks cold behind you.
Yes, we're broadcasting from Central Park South. We have Central Park in the background. It's a cloudy day here in New York, and it's winter. It is Bitcoin winter, but soon enough it'll be Bitcoin spring and then a fabulous summer. Would you agree?
It certainly feels that way, yeah, with what's going on. So I agree. I miss New York, by the way. I had a really good time in New York. I had a good time meeting you, meeting everyone else that I met, and just New York as a city. I had a really, really good time in New York.
Yeah, not see you in person. I think we met for the first time at Sailor's 100K party, and then got to meet up in New York and spend some time in the studio as well. Are you in Dubai? And if so, like, are you okay? There's like a lot of scary things going on in the world, to be very blunt.
Yeah, I am in Dubai. I have been here throughout the entire situation that's going on. Where I guess we're on the receiving end of a little, as your president described it, a little excursion that's going on that by the U.S. military. So yeah, it's been interesting. It's certainly my first time living in an environment where you have missiles flying overhead. I will say, my parents that live in the UK have been so bombarded by Western media. They think this place is turning into Gaza right now, which is, it's been interesting to kind of navigate friends and family that are getting Western media perspectives on what's going on in Dubai. And then to the point where I'm literally showing them what's actually going on, AKA nothing. And they refuse to believe it based on what's going on in the media over in the West. So it's been very surreal to experience that, literal vision of what's happening, and demonstrating that is not enough to calm things down. So yeah, yes, I'm here. The UAE has done a fantastic job. They've had 2,000 missiles and drones have been fired at Dubai and the UAE. And, they've done a fantastic job at subverting them, and defending them, and defending all of its citizens and expat residents as well. So they've done an awesome job. I mean, the first couple days were certainly interesting, but since then we've had a 97, 98% drop in threats. So again, you live in the Middle East and you get its advantages and its disadvantages, and you live in London and you can walk around the street and get stabbed or mugged for your watch. So I don't know. It's like you want safety for 40 years and then a couple weeks of fun, or do you want to just constantly walk around the city and feel the threat? I don't know, but it's for me certainly it's been very calm. The first couple days, like I said, were an adjustment. And then since then, watching the UAE response has been phenomenal. It's kind of deepened my resolve for living here.
So no place is perfect, but how does all of that compare to New York, or anywhere else that you've spent a reasonable amount of time to kind of form an opinion?
Well, I mean, you mean compared to missiles flying over your head? Of course you don't want to be in that situation. And the UAE has not been in this situation. I feel kind of sad for this country because they've done such a wonderful job over 40, 50 years building this, literal utopia on Earth, as much as you can create a utopia on Earth. And then within a 2-week window, there's been an attack on the entire brand and everything that they've built, and it's just sad. But their resolve has been phenomenal, and their ability to respond has been phenomenal, and the way they've dealt with citizens and residents and the protection of them has been unbelievable. And of course, the tourist areas are very quiet right now, but you go to the residential communities and they're full. There are families still living there, people still enjoying their lives, and that's what's important.
Yeah. At the risk of all of us turning into war, do you have any view on where we are right now and how quickly this might resolve? And if not, we'll go right into the Bitcoin Treasury content.
Yeah, like my involvement with this entire look, I can only look at what the media is telling me and what's coming out the mouth of the necessary leaders. So from one side, it looks like Iran was a very imminent threat, and on the other side, it looks like Iran was not a very imminent threat, and that is the fog of war that you're dealing with right now. So as far as I'm concerned, my only interest in it is the fact that I live in the UAE. UAE is home, and I don't want to see my home be attacked like this for an action being taken by the U.S. basically, right? And so I think that the faster it gets resolved, the better it is, and the better we can get on with living life as normally as we were. And by the way, life hasn't changed much, right? The food supply is awesome, the water supply is awesome. The all of the services that we have here are still operational. They've not taken a beat off. I don't know what to tell you. Like my life has literally not changed at all. Besides, the first 2 days of trying to readjust to missiles flying around.
Got it. Shifting gears just a tad. You have said, and I quote, Sailor and MSTR are buying Bitcoin while the con man is selling it. Make it make sense. Yeah. End quote. What does that say in your about who actually understands?
Yeah, it tells me that the entire 5 years, half a decade that I've dedicated to trying to help the retail, audience trying to get to one Bitcoin, basically, all of that has been for maybe 0.5% to 1% of my audience, because the rest of retail has basically given up. They've succumbed to the fear mongering that's happened, and they've decided that gambling their way to wealth is probably going to be the best way for them to do it. And of course, they're falling for all the psyops, and the best psyop that I've seen was the gold psyop, the gold and silver psyop that happened. What a phenomenon. I want to shake the hand of the person that, if there was one person that caused that, I want to shake that person's hand, because never seen anything drive Bitcoin out of the hands of retail more than that. I had people coming up to me to asking me whether they should, or trying to get me to justify them diversifying some of their Bitcoin holdings into gold and silver at, $120 silver. So, it was a fantastic job. But yeah, basically, I and everyone else that's been focused on selling Bitcoin and the idea of Bitcoin to retail has failed, as far as I'm concerned.
Got it. You've also kind of been very clear that MSTR is the only relevant Bitcoin treasury company. All others are garbage. What do you think specifically makes MSTR structurally superior to anything else?
Yeah, it's very simple, and the evidence is now, I said this a few months ago and people lost their minds, and now the evidence is sort of, coming to fruition. And it's very simple. They own the most amount of Bitcoin. Nobody's ever going to get close to the amount of Bitcoin that MSTR holds. They own so much Bitcoin that people are trying to compete like MSTR with IBIT, and these are two completely separate vehicles, right? One's an ETF, the other one's an operating business that's acquiring Bitcoin. But they've got so little competition that you have to compete with the ETF, right? That's a huge monumental mind state shift that comes with this, and their execution has been phenomenal. You look at the amount of pivots they've made since 2020 to try and get this to work. And what have they done in the meantime? They've accumulated 740,000 Bitcoin. They've innovated 3 or 4 times on the route to get to that Bitcoin, and they continue to do so. Michael Saylor is basically, demonstrating how financial innovation works here, and he's doing a great job at it. And the whole team over there, it's not just him, the whole entire team is aligned and focused on this. And, the evidence is starting to show itself now, which is, look, at the end of the day, you saw Strive put their capital into STRC. There is a reason why they did that. And the reason why they did that, and they didn't even consider buying Bitcoin or putting it into their own product. The reason why they did that, it's very simple. And it's what I said last time we spoke. It's all about trading volume and liquidity. People need to put capital in places where they can enter and exit when they want. And there is no other game in town as far as that's concerned when it comes to MSTR and its products as far as liquidity goes. And therefore they'll win. It's as simple as that. Liquidity is king.
What's the chance of any other company getting a reasonable amount of trading volume and liquidity in the near term or medium?
Yeah, well, it depends, right? Like, so, and the other thing that I've realized now, which Michael Saylor, again, there's a reason why he's a billionaire and I'm not, is the fact that he realized a year ago that trying to get somebody in the retail world to understand that they need to hold Bitcoin in their portfolio is a fool's errand. Larry Fink also understood this. Right? Larry Fink and what they did with IBIT was say, we're just going to go after the 1%, and anyone in the 99% that wants to tag along, they can tag along for the ETF. But we're going to focus on the 1% because Bitcoin, going back to what it actually is a monetary network. It is not a how many trees and people can you hug and help and save network. It's a monetary network, which means every dollar is what's important that goes into the network. So, Michael Saylor realized this, and he realized that trying to convince someone that they should hold, a 30% CAGR asset with a 40 to 50 vol is almost useless, because then you have to go through so much understanding change, so much mind state change to actually get that through, that most people are not going to do it. And if they're going to do it, they're going to do 1, 2, 3, 4, 5% of it, and that's it, right? And of course, retail has demonstrated this, because as hyped as everyone was in retail in Bitcoin, River's latest data shows that they're the ones selling. So, at the end of the day, they don't have what it takes to hold on to the Bitcoin. So what did Michael Saylor say? I'm going to pivot, and I'm going to give you 11.5%. And you're going to give me the Bitcoin. I'm going to hold the Bitcoin. I'm going to take the volatility, and I'm going to profit the extra 20% spread on the CAGR. And he created STRC, and STRC is a phenomenal product for that. And I like the way that they're continuing to innovate to sell STRC into portfolios. And I think they're doing a good job at it. So does anyone else have a chance of getting close? In my mind, no. right? So the only use cases for these treasury companies, as far as I'm concerned at this moment in time, is if you've got trapped capital somewhere in the world, like Japan, for example, 55% tax on holding Bitcoin, can't put it in a retirement account, so Metaplanet becomes an option. Outside of that, it's degens trading, and if your only route for generating trading volume is going to be creating X communities and hiring podcasters to talk about how great the treasury company is, and the only goal of the treasury company is to hold the Bitcoin, which comes with the volatility of it. You want to hold it. Any reasonable person wants to hold the biggest game in town, and that's MSTR.
I want to double tap on what you said, because some institutions, maybe even the majority, kind of start out at the private client level, and it's kind of gated and it's not available if you're not an accredited investor, a qualified purchaser, all these things. Is that what you meant, or what did you mean by BlackRock was going after the 1%, and if the 99 want to come along through the ETF, then sure? What did you mean by the 1%?
Yeah,
targeting?
like so last year, I think either last year or the previous year was the first time in American market history where the top 1% actually had more money than the bottom 99%, right? And so what I thought was going to happen was it was going to go in layers. So the baseline plebs, right, the early adopters had been in. And if you think about the pyramid, the next logical step is like high net worth, which is $500,000 to $30 million range, right? And I thought that was going to be who was going to be pitched Bitcoin, but that didn't happen. What actually happened was, and I know this because I was speaking to two people who are literally with the same wealth management company in the US. And one of them has a $7 million net worth, and the other one has a $200 million net worth. And the $200 million net worth person was being told that a 14% allocation in Bitcoin might be a good idea. And the one with a $7 million net worth was being pitched bonds. This is what happened, right? So the top 1% was pushed towards Bitcoin. And again, it makes sense because the top 1% has enough net worth where they can handle volatility. And there's enough dollars. If you get a 1% of 200 million versus 1% of 7 million, it makes more sense for the Bitcoin network. And because it is the absolute finite supply, that's what happens. Right now, even this price decline doesn't make any sense. This is all speculative trading. IBIT had basically they brought in $50 billion. After a 50% drawdown in the price, they had a 2% redemption. No one's ever seen this before, and this isn't the story that people are talking about, right? Because what's more exciting to talk about is a 50% price drop and whether we've got a 4-year cycle or not. All of that has been created by speculative trading. None of the IBIT, and by the way, Bitcoiners selling, right? It was also the first time where everyone thought, including myself, by the way, that the OGs of Bitcoin were just going to hodl forever. And it's also a weird time because, in a weird sense, those OGs in Bitcoin are very young, and they're now selling down the asset and actually transferring it up the age range, not down. They're selling it to boomers, right? That doesn't normally happen. Boomers, when they let go of their assets, they sell it down to the next generation. And now what we're seeing is that, the millennials that got into Bitcoin that have made phenomenal amounts of money are now selling that asset. And the boomers that have the capital and the wherewithal to hold it forever are the ones buying it. These are dynamic shifts that have happened when it comes to this. And people are arguing about a 4-year cycle. It doesn't matter. At the end of the day, we've had, IBIT is the one to watch here. And the fact that they brought in $50 billion and had a 50% drawdown on an asset and then only seeing 2% redemptions should tell you everything that you need to know. In addition to Michael Saylor continuing to buy thousands and thousands and thousands of Bitcoin on a weekly basis, should tell you all of it's being absorbed, all of it's not being sold. And if you're selling right now because you think you're smart enough to beat the market cycle, I wish you the best. But as soon as this degen liquidity is flushed out this market, there's only one direction for this asset.
Has the success of Stretch surprised you? Like the bid holding it at or above 100 and just the massive amount of Bitcoin that they've been able to purchase through that vehicle, or and where does that go kind of, short to medium term?
100%. 100%. I didn't get it. I had no clue because as my mind is working from the perspective of a growth orientated investor. And what Michael Saylor's realized is everyone's happy with 11%, right? And so I honestly I didn't get it. I didn't understand. I didn't understand the need for it. It didn't make any sense to me until I started seeing the trading volumes happen on the product. At the end of the day, the trading volumes dictate everything. I can give my opinion on anything. If the trading volumes go against what I'm saying, the trading volume's right. So yeah, they've done it. He's nailed it. This is a great product, and again, the risk factor. Look, the risk factor of STRC is a left tail risk of what happens if this doesn't work or what happens if MSTR blows up. The only thing that will fix that left tail risk is time. And this is now a 9-month-old product, right? So the time, we just have to let time develop this thing, and then it's gonna be graded. All of these things are coming for this product. And by the way, once that happens, I was watching his keynote and I texted Max Kaiser and because he came up with a great idea. He said he came to the UAE to talk about the idea of offering a US dollar-backed savings account by Stretch. And of course, the UAE, at this time was hesitant because, again, of that left tail risk. And so I texted Max Kaiser and I said, Max, this makes more sense for El Salvador than anyone else. Like you could probably get $1 trillion flown into El Salvador if they offered an 8% US dollar savings account backed by Stretch. And that would bring in $1 trillion, and you can make a 3% rip on $1 trillion. Like that is phenomenal. Like how that is almost doubling the GDP of the country just by offering a US dollar savings account. And Max texted back saying that's a great idea. So we'll see where that goes. But this is what's coming for a product like Stretch. BlackRock has a $1.3 trillion cash management business. And basically what they do is if you deposit money in a bank account, they offer the ability for the bank to make a rip and then offer you an interest rate, right? It's very simple. Well, I modeled it out. Like if you just take a 2-year treasury rate or wherever they put their money and you add 20% STRC, you increase the bank's profits by 70% on that same cash holding. And the only reason they wouldn't do that is because of this left tail curve risk on STRC, which will come down with time. So STRC is a phenomenal product. It is going to be, the main driving force of this. And I wouldn't be surprised if, and I think they've started saying it now, where STRC will be the main driver for the Bitcoin acquisition and MSTR will be ATM'd to pay the dividends. And so what does that do for the buying pressure on MSTR at that point, once that becomes the pattern, right? It's not yet, but what happens at that point? So I think a lot of people are being very short-sighted on this product.
I want to wrap a bit of your reflection on where we are with artificial intelligence. You said you listened to Saylor's keynote. There was a Q&A of the keynote, and he basically said something to the effect of business teams of 5 or business teams of 2 with an AI. Do you generally agree with that? And where this is going? Like, is AI going to steal all of our, or is it actually the opposite?
I think it's going to make us more highly leveraged. Like I'm learning how to use it. That's what I'm focused on right now, because as far as Bitcoin goes, what else is there to learn? There's only 3 rules to Bitcoin. And if you follow them, you're good, right? So after that, the only exciting thing to learn right now is about AI. Everyone right now should be learning how to apply AI to whatever they're doing. And if you're not willing to do that because of whatever psychological blockade you have, you're just going to stay where you're at. And that's what most people have done with their investments. That's what, and so most people will continue to do that, right? That's the reality of the situation. Most people in the world will just continue to stay exactly where they're at, whether they learn about Bitcoin or AI or anything else, because they don't have what it takes to take the action. Right now is the time to learn. Everyone I know that has a reasonable amount of wealth is trying to understand AI, or they're on the other side, which is I'm rich enough anyway, which is basically I give up. So you got to decide what side you're on. But yes, AI is going to make a meaningful impact, and I think that companies are about to. I mean, you're starting to see it now with the layoffs that are coming through. So if you can get one employee that's as effective as 4 employees, I think that's a good trade.
Absolutely. British, thanks for your time today. Appreciate you joining the conference.
My pleasure. See you soon.
Okay. And we'll be back with Knut Svanholm in just a moment. Welcome to the Bitcoin Treasury. Be considered financial, investment, legal, or tax advice. Please do your own research and consult with professional advisors before making any financial decisions. Stay with us. You didn't build a Bitcoin treasury to sell it. You built it because you understand sound money and you plan to hold through cycles, through noise, through everything. That conviction is the strategy. But growth doesn't wait for the perfect exit window, the deal, the expansion, the next move. Those opportunities are now. SALT lets you borrow against your Bitcoin and fund what's next without touching a single sat. Your thesis stays intact. Your business moves forward. Talk to the team at saltlending.com. Built for companies that think in Bitcoin.
We're Giga, a Bitcoin treasury company turning digital assets into real-world innovation. We're changing the U.S. building envelope market with high-performance facades and windows using technology and AI to power advanced manufacturing. With over 30% annual growth and strong margins, we're scaling with vision and innovation. Stacking Bitcoin since 2021, driven by our deep belief in it and a mission to become one of the top global Bitcoin companies. Discover what we're building next.
Spreadsheets, CSV exports, blockchain explorers, tax, season, panic. Sound familiar? Bitcoin accounting doesn't have to be chaos. Bitmint is a Bitcoin native accounting infrastructure. Connect your wallets, transactions import automatically, cost basis tracked to the lot. Bank style statements and tax ready reports. Bitmint, clarity from day one.
There's a new way to retire. With Bitcoin IRA, you can invest in crypto 24/7 with tax advantages, giving you more ways to diversify and grow your retirement savings. Choose a traditional IRA to defer taxes or a Roth IRA for tax-free withdrawals later. Either way, you can grow your portfolio and pay less in taxes. Setting up your account is fast and easy. It only takes 3 minutes to get started. Take control of your future with Bitcoin IRA.
Everyone should be able to save and protect their wealth across generations. We built this company so billions of people around the world can take control of their financial lives. We've reimagined savings and protection from the ground up with digital money and modern technology. We're the world's first Bitcoin life insurer. For the first time, people can save, protect, and pass on their wealth entirely in Bitcoin. 4 years ago, we started working directly with individuals. Today, as the Bitcoin economy has grown, some of the world's largest and most conservative institutions are joining us in our vision. Every economy is built on patient, long-term capital. Bitcoin is the foundation of the next phase of global finance. We're not just building a Bitcoin company. Meanwhile is the backbone of how everyone will save in the future.
Football Tech, where soccer and technology meet the power of Bitcoin to transform the future of vulnerable communities. This is what Bitcoin philanthropy looks like. Soccer, technology, and Bitcoin. Join the mission. Help change the game at footballtech.org/Bitcoin.
Run your company at machine speed. Not using AI, you're already behind. Meet Orchestrator, built for Bitcoin native companies. Build, deploy agents, automate treasury and marketing. Close your books 5 times faster with zero spreadsheet drag. Cut manual work by 90% with 100% accuracy, with non-custodial automation, full audit trails, and human-in-the-loop approvals for every critical decision. To learn more, visit bitcoinorchestrator.com to schedule a personalized walkthrough with our team.
Debt is exploding. Bond yields are rising. Trust is eroding. But this isn't only about risks. A rare strategic opportunity is opening. Bitcoin is changing the game. And for the first time in decades, financial strategy is exciting again. MicroStrategy blazed the first trail, but each company's pathway is unique. While traditional consultants ignore Bitcoin's potential, Orange Wheel helps forward-thinking leaders see the opportunity and act on it. Orange Wheel, strategic guidance through the monetary transit.
Welcome back to the March 2026 Bitcoin Treasuries Digital Conference. I'm excited to bring to the stage Knut. He's a longtime thinker and author of books like Bitcoin, Sovereignty Through Mathematics, and Bitcoin, Independence Reimagined. He's known for his philosophical take on money and personal responsibility. He's built a massive following and has quickly orange-pilled tens of thousands of people through his writing and ideas. So welcome, Knut, to the conference.
Thank you very much. All good. All good. It's a sunny afternoon
Loud
here
and
in
clear.
Spain. Nice to be here. Can you hear me? Can
Yes,
you hear
sir.
me good?
Loud and clear.
Yeah, happy to be here.
I guess I start off with you've often framed Bitcoin as a tool for individuality. So when you've seen the Bitcoin treasury emerge, do you kind of view the distortion of that mission or a different layer of adoption or something else?
Well, I view them as basically Bitcoin with an added layer of risk, really. I mean, to truly tap into the personal sovereignty that Bitcoin can bring you, you really need to take control of your own keys and preferably even run your own node if you want to have any influence in the future of the network and want to have a say in which path this discovery or innovation, where you want this thing to go. In order to do that, you actually need to run a node and choose through your own volition what kind of code to run, and to access the permissionlessness of the whole thing. I mean, Bitcoin is first and foremost permissionless money, meaning that you are allowed to send whatever amount you want to anyone in the world, and no one can do anything about that. But in order to do that, you need to have control of your own private keys. If you're owning Bitcoin through a strategic reserve company, you don't get that part of it. You may get the store of value part, and you may get the number go up part of it, meaning that you can be along for the ride when Bitcoin's price skyrockets, which it inevitably does in cycles, sure, and it's volatile and all of that. But if you zoom out long enough, Bitcoin can really only go to 2 places. One is zero, if something that none of us can foresee should happen. It's still this binary bet. Either it goes to 0 or it goes up forever. And it's the foreverness of it that really attracted me to it in the first place. Like what I saw when I first fell into the Bitcoin rabbit hole was not an asset, not a currency, not a form of money. What I saw was something on the internet that couldn't be copied, which is what blew my mind, and which is why I decided to try to debunk it for the first couple of years, because it sounds outlandish to me that something in the computing world cannot be copied, because everything in the computing world is made up of ones and zeros. Everything is information, and information by its very nature is infinitely copyable. So I tried to figure out what makes the Satoshi special and why it's not copyable. And the conclusion I've drawn from that is that the real what Satoshi really are is not a number on a screen somewhere or on the even on the time chain, but the ability to move them, which is always in a human being's head. It's always a human being keeping a secret from everyone else. So we can act as if we own the Satoshis. We don't really own them. We don't really possess them. What we can do is act as if we did, because we find it implausible or improbable that someone else owns or controls the same private key as we do, and B, that we find it implausible or improbable that the rules will change to such an extent that someone can double spend the coins, or in other words, print more money. So those are the two criteria that we Bitcoiners believe that the code will do for us, and that it's this agreement on a fixed set of rules enforced by the users that makes it impossible to inflate the supply, and also makes it very improbable that someone else holds access to the same private keys as we do. That is what gives us true sovereignty and true freedom. Not like there's a difference between liberty and freedom in my mind, because liberty is something that you're given. Freedom is something that you're born with and that you claim for yourself. Liberty is sort of imposed from above, and like Bitcoin is the tool to get out of everything that is imposed from above and just doing whatever you want to do by running the code that you want to do on hardware that you choose to buy and software that you choose to run. So everything is voluntary and everything is out of human free will, and this is what gives us sovereignty. And while these treasury companies and Bitcoin treasuries, while I have nothing against them, and it's a good, I guess, way for boomer to tap into the big pool of boomer money that is out there, that is not that would otherwise not have been able to tap into Bitcoin. They can be a bridge across that gap in a way, but everyone should be aware that if you hold your Bitcoins on an exchange, or if you hold your Bitcoins in through via a third party by owning equity in a company that has Bitcoin on the balance sheet, you're not getting the entire sovereignty of the thing. You might be getting access to this lens that it provides that allows you to look at the to look at prices through if you view prices through a Bitcoin lens, you can see that the true nature of the free market is deflation, and you can say that you can see that all prices are falling forever. So you might be able to tap into that, but you're not getting the full package until you realize that you need to control your own keys, and that's what gives you true freedom. So I remain a Bitcoin treasury company skeptic in that sense. Yet again, I think this is a good pathway for some fiat money that are sitting in big fiat bank accounts that are regulated and whatnot, that otherwise wouldn't be able to touch the Bitcoin system at all. So I believe they're doing good for the most part, but I also want to stress that people ought to realize that to get the real benefit from Bitcoin, the real true sovereignty, you actually need to control your own private keys and run your own node. That's sort of the message I want to send.
How did you first discover Bitcoin?
That's a good question. And truth is, I don't remember a specific point in time. I found an old receipt the other day from 2014 where I bought Bitcoin off an exchange for what now looks like a ridiculously low price. I probably wasted most of that back then, like everyone did. But I've been in this for more than a decade now, and I remember falling deep into the rabbit hole in 2016, where I took an online course and learned more about it, and then started writing about it and forming my own thoughts and so on and so forth in 2017. So yeah, I've been here for about a decade now, and I decided about 4 or 5 years ago to quit my old fiat job and do this full time and talk about Bitcoin and similar topics and see if I could make it on my own. Doing whatever it is I do. I'm still trying to figure it out. But yeah, I don't remember a specific trigger thing that made me fall down the rabbit hole. I remember the first time I printed a paper wallet, which was a big thing back in like maybe 2015 or something, where you there were these websites where you could print a private key and a public key. Use the process was you went offline so that you were sure that you weren't going to be hacked or anything, and then you created a random number and you printed this paper, and then you went online again, erasing your internet history, and all of a sudden you could send bitcoins to a piece of paper. And I did that, and I also realized that I could scan the address and then put the piece of paper in an envelope and then send money into the envelope. And that's one of the first like magic moments for me, where I realized that this goes through all walls. Like I might as well send it into a bank vault or out of a bank vault if I was in it. Space and time sort of, it's this realization that money is nothing but an abstraction. It's just a way for humans to communicate value with one another, and it never needed to be anything but that. It's just that now we've figured out a way to do that ethically and without trusting any single entity with a money printer, or trusting a single entity with the access to a ledger. But we could all keep track on one another by sharing the ledger with everyone in the system. And it makes all the difference when you know that you have something that they cannot do anything about. It's just to me it's just a means of communication between human beings, where we can communicate value with one another, and no one on earth can do anything about it. It's the first time that humans have built something that we cannot destroy. And to me, that's the mind-blowing part, and the part I cannot get out of my head, and I keep thinking about it every single day of my life. I have ever since.
What's been the feedback to these materials, these books that you've published? Do you go to like local Bitcoin meetups, conferences, or is it mostly digital communication with other Bitcoiners?
Well, for me, it changed my life completely. I published the first book. Let's see, I have a bunch of copies here. So the first book I wrote was just a collection of my articles, and then that's the only book I had to my name on the internet, and I wasn't very proud of it. So I decided to write a proper one, and that was this one. It's a very short book called Bitcoin Sovereignty Through Mathematics. And I got a bit of help with it from John Attack, a very prominent Bitcoin Core developer who's fluent in seven languages, and he helped me edit it, so it became a lot better for that. There's a pod coming out very soon about that story. I haven't been able to tell that whole story until now, but I brought 50 copies of this to Baltic Honey Badger in Riga 2019, and then the life the book sort of took on a life of its own. I gave 25 copies away to prominent Bitcoiners, and I sold 25 copies, the remaining 25 to other plebs using cash or Lightning. Lightning was in its infancy, but it still worked back in 2019. And after that, in 2021, I believe, or 22, I got a message from Michael Saylor saying he really liked the book and he'd like to put it on hope.com, which is Strategy's Bitcoin education webpage. And I, of course, said, yes, you may do that. And it's been selling better since that happened. But that's not the only thing. I mean, I've got a lot of good reviews for it and everything. So I kept on writing about Bitcoin, and I've written four books about Bitcoin in total now. The first one being this one, Sovereignty Through Mathematics, and the second one called Bitcoin Independence Reimagined. The third one is probably the most famous one, called Bitcoin Everything Divided by 21 Million. And there's also the last one called Bitcoin, the Inverse of Clown World, which I co-wrote with Luke DeWolf, my podcast co-host and pod producer from 3 years back. And I also wrote a book on praxeology and Austrian economics. And I travel the world and speak at Bitcoin conferences, and I do stuff online. And I'm still trying to figure out my role in this. I enjoy all of it, and it's more about choosing what not to do rather than choosing what to do, because there are plenty of offers out there. So I just keep on telling people about Bitcoin.
Going back to Bitcoin and the corporate adoption, you've warned about what people call paper Bitcoin and rehypothecation risks. So I guess what would a Bitcoin treasury company need to look like for you to consider it at all kind of aligned with Bitcoin's principle, if that's even possible?
Yeah, I mean, when you invest in one of these companies, first of all, for it to make sense for me, it would have to go up in price faster than Bitcoin itself would go up in price. And that is a tricky thing, because the stock market is a different thing than the Bitcoin market, right? So you would have to know that this company is doing what it's saying it's doing. So a lot of due diligence is required, I guess. You need to look in to that the company you're investing in is really doing their thing. Other than that, I mean, there's no reason that every company on earth couldn't have Bitcoin on their balance sheet. Everyone should have Bitcoin on their balance sheet. So I know Strategy, for instance, they do have an income per year from their legacy business, which is like IT solutions for the big tech companies, right? And they make about $500 million a year from that. That's a figure from a couple of years back, so I don't know what they're making now, but they're a legit business that can survive on that alone. And what they're doing, as far as I know and as far as I understand it, is that they're using this income to do all these Bitcoin purchases and take out mortgage to buy Bitcoin. It's all fine, I guess. What you have to keep in mind is that the company itself does not. They're not in control of the private keys. If they're a public company, they probably required to hold their Bitcoins with a trusted custodian that is sort of okayed by the government and everything, like Coinbase or some other big Bitcoin custodian. What you need to know is that at the end of the day, the guy that actually controls the keys is an employee at Coinbase, or probably they have some multi-sig set up, so it's not just one guy, but a bunch of guys that has X out of Y number of keys to unlock these Bitcoin and be able to use them. But that introduces a third-party risk, and not only a third party, but a fourth party, I would say, because if you invest in one of these companies, you trust the company that's invested in Bitcoin to trust the custodian to hold their Bitcoin for them. And at any point in time, the the people at that custodial company may collude and just take the Bitcoin and go and buy an island somewhere, and all of a sudden there's zeros everywhere. So that there is a bit of risk to this. I don't believe any of this will happen anytime soon. I think these things are quite secure. But you should know that in order to access the full sovereignty that Bitcoin can give you, you need to control your own keys, and you need to, at the end of the day, run your own node to make sure that the rules do not change to the extent where the 20 million supply cap or anything like that is changed in any significant way. So for me, it's easier to just buy the underlying asset than to buy anything that's built on top of it. It makes more sense to me, and I also urge people to use their Bitcoins and not to be too afraid of institutions or governments that tell them not to. But it can actually be used as a medium of exchange over not only time but space. You can use it to trade with other people, and you can be self-sovereign. What I always recommend people to do is keep their KYC stack separate from their non-KYC stack, meaning that if you bought your Bitcoins off an exchange or a KYC exchange where you had to tell the government all your details, then keep that stack separate from whatever you got on the black market or from a friend or whatever, because you wouldn't want to mix the two. Because once you do, they can connect you to the other Bitcoins that you may or may not want anyone to know about. So like if you want this full self-sovereignty package, you sort of need to control your own private keys. That's still, it's a phrase I miss hearing at these Bitcoin conferences. It's not your keys, not your coins. We used to say that all the time, but I don't hear it anymore, and that is sort of concerning to me. Even though I understand that this is going to grow bigger, and there's going to be bridges to the fiat world. We need to tap into the boomer money somehow, and this is probably what that looks like. I'm just reminding people that to access the full what's the word? The full utility belt of superpowers that Bitcoin can give you, you need to control your own keys.
Got it. We have about a minute left. When you talk about counterparty risk, or let me try to like tie this up in a bow and see if I'm missing anything. You can have Bitcoin. If you're going to allocate or try to educate yourself about corporations that hold it, doing different strategies, different financial engineering, have points of counterparty risk. You have executives said that as a public company, if it have civil liability, criminal liability. So if you have all of that in mind, is that a fair kind of out on a very high level, or am I missing anything in addition to kind of the counterparty risk and the liabilities, the responsibilities that public company officials have?
I mean, it all boils down to how much you trust the legacy system. If you trust your government, and if you trust your government's institutions, and if you trust everyone involved to do this properly, then go ahead, buy Bitcoin Bitcoin digital reserve companies. for sure. But if you don't, if you have any questions about that, like if you're not as trusting of institutions, then you should probably learn how to take control of your own private keys. I mean, this is what Bitcoin was. This is the very purpose of Bitcoin. That's why the chancellor on brink of second bailout for banks. Like, Bitcoin is the remedy for fiat. It's the antidote to fiat, really. So you're not really in Bitcoin to make more dollars. you're in Bitcoin to not have to use the dollar at all at the end of the day. In the long run, the Bitcoin and the dollar cannot coexist, because one is inflationary and one stays the same. It's a winner take all game. Either Bitcoin goes to zero for some reason that I can foresee, or it will surpass the dollar and take over the world. And that's what I'm hoping for. And I hope more and more people really look into what it actually is and take control over their own private keys.
Where's this for people to connect with you online?
Well, you can find all my books at bitcoininfinity.com. I have a podcast called The Bitcoin Infinity Show, and you can find all my books at Amazon as well. But my biggest channel is on X. I'm at Knut Svanholm. My name is one word on X, and you'll find all my thoughts there. I tend to post a lot. A lot of it is humorous, and I, for lack of a better word, shit post a lot. So it might not all be serious, but every once in a while I try to put a clever thought out there. And if you follow me, and you may DM me and connect with me that way, if you want something more than just interacting on social media.
Awesome. Well, thank you for your time today. Super appreciate you joining us.
Thank you for inviting me. I've enjoyed this a lot.
Awesome. Thanks. We're going to go right into our next guest. He is the head of Europe at Bitwise, helping lead Bitcoin and crypto investing region. Bradley, good afternoon, or is it evening there already?
Yeah, good afternoon. It's just approaching 5 o'clock where I am today. So, yeah.
Okay. Well, we'll do
Good to
this,
see
and
you.
then it's margarita time.
Absolutely.
You've been at the center of Bitcoin adoption in Europe. How would you describe the European investor mindset to maybe today versus a couple of years ago?
Okay, well, it's an interesting question. It is quite challenging to sort of describe the investor mindset in aggregate. Of course, there's retail investors, there's institutional investors across many regions, but on the whole, I would say that investors are now far more open to Bitcoin than they were a few years ago. Of course, you have the haters who stuck in their ruts. They've got this strong cognitive bias, anchoring bias, whereby they've decided that Bitcoin was bad because of something they read many years ago, and still dig their heels in year after year. The Financial Times here has famously loves taking knocking Bitcoin and crypto in general. But the reality is, and this is from our experience at Bitwise and going out there and speaking at conferences and events and meeting institutional investors in their offices, and we've definitely seen a big shift. I think this has been helped along by the advent of the US ETFs, the Bitcoin ETFs, and the others that have followed since. That's definitely helped to normalize this asset class of this in Europe. If you want to look at that through that investor lens, but in general, conversations have moved on. We used to have people spouting the same tropes about Ponzi scheme or no intrinsic value or proceeds of crime, and now people have really moved on from that and are actually having intelligent discussions with us, asking important questions, are looking at, for example, just portfolio analyses to see what adding Bitcoin to a a balanced portfolio, how it would change. They're asking those questions. And so I think it's moved on and it's in a much better place.
Got it. What do you think the biggest misconception might be that U.S. investors have about the European Bitcoin market? Like, is it a separate market from the U.S.? Or are we all more the same than different? Or are there things that you see when you're having conversations versus other markets, the U.S. being the obvious example?
Yeah, I think it's an interesting question again. I think probably the biggest misconception that US investors have, or they just don't think about, is just the fact that they see Europe as a unified market, and it's just not. The US's superpower is that it's a very large single market with a single currency, for the most part, a single regulator and tax code, and Europe is the complete opposite. What holds Europe back is the absence of this. It's got different languages, it's got different currencies, it's got different regulators, it's got different tax codes, and that just adds a lot of complexity. So you have a region where there's over 500 million people, but it's very diverse. It's diverse also in crypto adoption. We see in Germany adoption around 10 to 15% of the population, holding Bitcoin, whereas in Switzerland, it's over 20%. The adoption is much larger, and just in general as a continent or as an economic region, it's just more complex, more, you've got the UK, which is actually outside the European Union, and so is Norway, and then that's before you even think about Turkey and places like, it's also a place where there's a lot of different these anomalies. Like Sweden, for example, even though it's only a country of 10 million people, if you exclude it's actually got the highest population per capita of billionaires in the world, excluding banking centers like Monaco and the likes, and so it's quite an interesting place. It's hard to do business here. It's harder than in the US, but and that's kind of what part of our jobs is figuring that out and addressing the markets as they regionally rather than looking at it as a whole.
Reminds me of the fact that Europeans before the US did. So what was the reality of that, and is Europe ahead on some things? What did the US get maybe right or wrong by not being first? And does that, you hear all this narrative about the US leading, right? The rest of the world is going to follow what the US does, with strategic reserves, with so many people. What's kind of the reality of that in your experience?
Yeah, it's definitely. I mean, for the most part, the US, especially in matters of finance, the US does lead the world, and the rest of the world does look to what's going on in Europe, in the US with interest, and as you point out, the ETPs in Europe, started to pop up. The proper sort of like physically backed ETPs started to pop up in around 2019 onwards, and then we had staking ETPs a couple of years later, and there's really a large range of different tokens and basket products in the ETP wrapper in Europe. So in a way, definitely Europe was ahead, but I think what the US did right was, sort of regime change at the SEC. That was and what's everything that's come with the current administration's approach to crypto. This has made a huge difference all around the world. So even though the local laws and acts that are being passed, the Genius Act or hopefully the Clarity Act, it's really setting the tone from the top that that Bitcoin and crypto is here and an important part of the agenda. Saying the Bitcoin reserve, strategic stockpile, making a US goal to be the crypto capital of the world. These are very, very important things that actually really help the Bitcoin and crypto story all around the world. So I think US is still leading. The US was slower off the mark, but it has more than caught up. And just by looking at the flows into the US ETFs versus European ETPs, in such a short space of time since the beginning of January 2024, so only a couple of years now.
Are you able to see through the flows what's driving demand in Europe today? Is it retail? Is it like, no, it's more institutional, or is there a breakdown that is pretty consistent or changes over time from a flows perspective?
Yeah, I think the story is similar in the US. Initially, when we first started and listed our first Bitcoin ETP in Europe back in June 2020, the flows were overwhelmingly retail. Everything was coming from retail. There were maybe some specialized hedge funds that were trading and started had an interest, and those were substantial. But on the whole, most of the investors were retail, and that's shifted over time. Of course, you do have the institutional bid. You have the treasury companies who are buying, and not as large as the US treasury companies, but they do exist in Europe. Capital B. There's H100. There's also Blockstream. Capital that's seeding and investing in a bunch of other companies, and I think what's really going to change and really shift gear for Europe is this recent announcement that we got from Luxembourg that they will allow the UCITS wrapper, this is actually the European ETF. The crypto ETFs, the Bitcoin ETPs that we have in Europe, it's a different structure. It's not a structure that's accessible for most investors, but the UCITS wrapper there's about 20 trillion US dollars invested in the UCITS wrapper. They've now Luxembourg announced that they would accept up to 10% allocation to crypto ETPs within this wrapper. And Luxembourg is one of two of the large jurisdictions that approve UCITS. It's Ireland and Luxembourg. They, I think, together do like about 90% of the whole UCITS ETF. So I think that's a huge shift, and I think that's really going to open up the market for the institutional investor in Europe. But right now, the conversations we're having, the institutions are getting involved. Some of them are more slower moving than others by nature, but they are interested. They're having the conversations and they're learning, and they will allocate if they haven't already.
There's been some narrative around this whole allocation percentage of 1% or get off 0, 1%, 2%, up to 5%, or maybe that's more of a US thing. Is that a global thing? And what are you hearing in conversations where you hear astronomical numbers and you don't know what is true and what is not? If there's some allocation percentage that's actually being discussed above 5 or 10 or 14%, or is that even from like a Sharpe ratio perspective, like just totally nonsense?
No, I think the numbers on this are very similar. For the European investors, institutional investors are looking at. I mean, we go out and we have the conversations with investors. Bitwire's team across Europe are having these conversations every day about a 5% allocation, and the difference between a 1% and a 5% allocation in terms of the Sharpe ratio, how much volatility is introduced into the portfolio, and the max drawdown. So these are all the same metrics we're looking at, and that 5-6% seems to be kind of a sweet spot. And it seems like it's a no-brainer for a lot of portfolio fund managers to allocate. It's almost like a free option for them to really boost performance. And so we do absolutely sell that narrative. There are some funds, and we see this in particular in Germany, and now Germany's got a very sort of crypto forward regulator in BaFin, and so you see funds there holding a lot more crypto than in other regions, and so 10%. We even see more than that, up to 20%, in certain investors, as certain funds, asset managers in Germany. So the narrative is very similar, and it's people are thinking, and the numbers don't lie. And yeah, absolutely, that 5% number is there. But for those with a high risk appetite, and with more, let's say, more savvy investors, they're more they manage the risks well. Then absolutely they are getting involved at higher levels than that.
We're going to have our friend Aldana join us in a moment, but first, can you kind of walk us through, maybe on a high level, if there's a lot of them, but like, what are his product offerings in Europe? What markets are they available in? Is it just like, well, it's Europe, Tim, all of the markets in Europe? Where are they accessible? Those sorts of details.
Sure. So look, so we have at Bitwise, we have 4 real sort of buckets of products. We have the US ETFs. We have also the alpha strategies and the SMAs, and increasingly now the Vault offering as well. So on-chain asset management, and then staking, also part of the on-chain offering. We do Bitwise recently acquired Chorus One, as well as a test, and a couple of years ago, and so has a large institutional staking business. But then for the European ETPs, our products are listed all across Europe. In the major markets, we are actually a German issuer, so Germany is our sort of a home market. And it's also German. The Deutsche Börse is the largest ETF market in Europe, ETF, ETP. So we're happy to be there to reach as large the largest cross section of the population. But we are on all the other large exchanges as well, Euronext in Paris and Amsterdam, and London Stock Exchange, and recently listed on Borsa Italiana in Milan as well. So yeah, products are widely available. The crypto ETPs, we have 2 Bitcoin ETPs in Europe.
Where's the best place for people to reach out to Bitwise and maybe to you also if they want to connect?
Yeah, so sure. I'm on LinkedIn and X. On LinkedIn, just search my name, and on X it's at Bradley Duke _ is my handle, and the same for there's Bitwise in Europe, on both on LinkedIn and on X as well. So yeah, feel free to reach out. I'll absolutely do my best to get back and respond quickly.
Awesome. I think we're going to have Aldana join us now to cover a special announcement. Hi, Aldana.
Hey,
Hello. Hi, Bradley. Nice to see you. We have interchanged few emails lately. Thank you so much. I think everybody already knows that you're going to be the official partner of our wonderful event that we are preparing in Madrid. So excited for it. So grateful. We're going to make it big. We have got the great announcement of the great update that we made to the event. We decided to make it even more appealing, to make it even more Madrid-wise. We just confirmed the wonderful, precious, the best architecture venue in the very heart of the center of Madrid. So it's going to be really, really wonderful. We are expecting more than 1,000 people there. The focus will be, of course, a very institutional one. However, we do not discard the newcomers. The agenda is already there. We're going to announce it just hopefully this week. The focus will be to introduce people to what Bitcoin really is. So we're going to start like slowly. However, later on, we're going to introduce everyone to what the institutional Bitcoin is. There are a lot of companies still in the financial institutions, banks, investment funds. They're still like a little bit lost of what really is going on with all this new financial engineering. So the agenda that we prepared will explain step by step where we were in the Bitcoin until now, where we are all heading, where the Bitcoin is heading in the new disruption with the artificial intelligence, with all the quantum danger, as they say. Let's see whether it's really true or not. We're going to try to explain Bitcoin in the context of the stable coins, which are like crossing a little bit the roads with Bitcoin more and more. We're going to explain to everybody who are the builders, the new builders and the existing ones in the Bitcoin space. There are a lot of companies, as I said, there are banks, there are investment funds, there are ETFs, of course, Bitwise, but there are also a lot of people that are building small. There are a lot of startups. There are a lot of small companies that are preparing the solution for those companies that are entering the Bitcoin ecosystem, financial institutional Bitcoin ecosystem. We're going to bring great talent, young talent. Few universities will join us with their products that will be shown during the event. I think, the future is in the young generation. We're going to have the great pitch of startups together with Antidote under the umbrella of Fulgur Ventures. So there are a lot of great surprises prepared for everyone. And as I said, in the very heart of Madrid, we're gonna focus on bringing to you the culture, the heritage, everything that Spain has to offer, not only from the Bitcoin and financial perspective, but also from a very fiesta perspective. So we're gonna have a lot of fun. So I hope everyone will join, and we will see you there soon.
Looking forward to it.
Yes, looking forward to it, Bradley. I'll see you soon, and all your team.
Aldana, where's the best place for people to go? Up, it's on the screen. Where's the best place for people to go look at information and get their ticket?
Yes, of course. Our webpage is madbitcoinsummit.com. You can also just Google it, and it's popping up first in the Google, Mad Bitcoin, and that's it. The event will take place from 9 to 12 of May. 2 first days, 9 and 10, it's weekend, so we're going to have a lot of side events we are organizing around the event. And the main event is 11th and 12th. It's Monday and Tuesday. The venue is called Círculo de Bellas Artes. This is like the most wonderful cultural place that we can find in the center of Madrid. So it's going to be really a lot of fun, and in the biggest place that we could find.
Cool. Awesome. Aldana, thanks for joining us. Bradley, thanks for joining us.
Thank you very much.
And stay right there.
Thank
you.
We'll
be right back with CJ from Strategy. Welcome to the Bitcoin.
To schedule
Each company's pathway is unique. While traditional consultants ignore Bitcoin's potential, Orange Wheel helps forward-thinking leaders see the opportunity and act on it. Orange Wheel, strategic guidance through the monetary transition.
Bitcoin Treasuries Media is going global in 2026. Join us in Bristol, New York City, Madrid, Las Vegas, Boda, and beyond. Visit bitcointreasuries.media for tickets. Join Bitcoin Treasuries Media and the Welcome back to the Bitcoin Treasuries Digital Conference. I'm excited to welcome CJ to the conference. CJ, better known as _Bitcoin on X, is part of the team at Strategy that's working on arguably the most innovative Bitcoin native financial products in the market today. He's on the screen. He's at the intersection of Bitcoin, capital markets, and what many are starting to call digital credit. CJ, thanks for joining us.
Thanks for having me, Tim. Glad to be back. Great to see that you're still doing these conferences every other month or every other quarter. So I think it's a great thing that you do. And thanks to both you and Ed for inviting me back on.
Absolutely. For those that are not familiar, or even the phrase, sometimes it's better to be reminded than instructed, can you give us kind of the backstory on digital credit and where we are right now and where this might be going? I published a post in the last week on X, kind of talking about the trading volume of Bitcoin itself per day, right? Maybe, and correct me where I'm a little technically incorrect, maybe $20 to $40 billion a day of trading. And so if Strategy and these other Bitcoin companies can scale these digital credit products where they're purchasing $1 billion, $10 billion, or even over $50 billion of coin per day, and maybe that's not in the near future, how would that really kind of impact the flywheel, to use that word, of this kind of financial engineering, or for all of the word salad around all of this? It's almost like a leveraged buyout of the Bitcoin network. Would you kind of agree with that or no? And I apologize, I just gave you 17 questions.
No, I fully agree with that. I actually come from the world of private equity. I worked at Blackstone for 4 years doing leveraged buyouts of different assets in different sectors, primarily in the tech sector and industrial sector. And I love that framing, that what Strategy is doing and what a lot of Bitcoin treasury companies are doing is a leveraged buyout of Bitcoin, an LBO. And the very unique thing about this is that it's infinitely scalable, as opposed to a regular private equity fund struggling to find more assets to acquire in a particular theme or sector that they're very bullish on. And for us at Strategy, we could start with $500 million, scale it to $5 billion. And now we've scaled it to $50 billion and can potentially scale it all the way up to $500 billion, $5 trillion. So it's an infinitely scalable LBO. But to go back to your original question on what is digital credit and what a good sort of reminder for folks who are listening might be is, Bitcoin is digital capital that's scarce and virtual and desirable, and is the best way of preserving value for the long term. And using Bitcoin as digital capital, what Strategy is doing and what a lot of other treasury companies are doing is creating a layer of credit, which we like to call digital credit, that benefits from the characteristics of digital capital of Bitcoin, but has the features of a credit instrument, which is it's fixed income and you receive cash dividends or cash payouts if you hold the digital credit instrument. And there are different classes of digital credit instruments that we have. And the flagship one is Stretch, or STRC. We launched this in July last year. And the number one most interesting feature of Stretch is it's designed to be stable in price near its $100 par value. Whereas the other instruments have some volatility in their price. And the reason we launched Stretch is because we learned from the previous instruments and learned that while they're very interesting and there's large appetite for them from a particular set of investors, most retail investors and most, just individuals in the world want something that's stable in value, but still offers them really high yield or high cash income. And that's why we came up with these unique characteristics for the instrument Stretch and created something that's stable at 100, but pays out currently an 11.5% yield. It's paid via monthly cash dividends that are all tax deferred. And we back it with 2 to 3 years of dividends in the form of cash on our balance sheet and another 4 to 5 times of Bitcoin reserves on our balance sheet. And what we've seen is an explosion in demand for Stretch from both institutional and retail investors, especially in the last 1 month. And as you would have noticed, in the last 2 weeks, we raised $1.6 billion through Stretch alone. And that compares with the $400 million of Bitcoin being mined or coming into circulation through miners. So about 4 times the Bitcoin mining is being bought by Strategy via Stretch alone. And that goes back to your point around what this will do to the price of Bitcoin and how this will get a new flywheel going as we issue more Stretch because there's such big appetite for it, and we back that with Bitcoin. So we go and buy Bitcoin on the other side. We create demand for Bitcoin. We push the price of Bitcoin up, which further strengthens our balance sheet and further makes Stretch look more attractive. And we can issue more Stretch, can issue more MSTR, and keep buying more Bitcoin. So it helps us as a business, and then it strengthens the overall Bitcoin ecosystem and network, pushes the price of Bitcoin up. So I hope I answered your 17 questions there, but let me know if I missed anything.
Absolutely. Michael Saylor was kind of famous for saying that, well, several things, but including that he doesn't want to necessarily take an opportunity away from somebody else. He wants to be a good partner to other companies and only do things that maybe other people can't do, the things that they can do. So what have you seen in the ecosystem as far as, there's companies building on top of Stretch, trying to, I guess call it building digital money? Would you describe that? And what are very obvious opportunity in the marketplace right now that entrepreneurial individuals might look for? Because things starts with a conversation, right? It's like when I'm having conversations with executives, I'll often ask them, how did you come across this idea? And it's almost always a conversation they've had with a partner, with an investor member, with somebody. So are there, I guess, first of all, what are the opportunities of building on Stretch? And then what other opportunities do you see in the ecosystem for that are more entrepreneurial?
So I think going back to the way Michael describes it is Bitcoin is digital capital. It's the base layer. Stretch is something we've created as a treasury company. It's digital credit. It's the second layer. It's only possible because we hold so much Bitcoin and have such a large base of digital equity, that's MSTR, that backs the digital credit. And that's, let's say, Stretch for now, which has $5 billion of notional value outstanding, trades about $200 million per day on average. And now people can take STRC, Stretch, and create a third layer, which might be digital money. And they can further improve upon the characteristics of Stretch or tweak the characteristics of Stretch to create a product that is more appealing to a certain jurisdiction or certain group of people, or fits into certain regulatory buckets that people want and crave. So digital money could be this idea of taking digital credit, stripping away some tiny bit of volatility that exists in the price of Stretch, where it does sometimes trade down from $100 to 99.8 or 99.5, especially on the ex-dividend date, the day after the day you need to be holding it to receive the dividend, which happens once a month. And you can strip away that volatility completely and make it a perfectly stable instrument by putting some equity buffer in there and hedging away the volatility. And instead of passing through the entire dividend to the holder of the digital money instrument, you pass through, let's say, 80 or 90% of it. So you don't give the 11.5% dividend, but you give a 9% dividend or 8% dividend. So in theory, you've created something that's perfectly stable with no fluctuations whatsoever. And you're still paying a 7 or 8% yield, which is very, very fat and juicy. And that can have even more demand than something like Stretch. So Stretch becomes something that we create almost like a commodity, or not commodity, but we take Bitcoin, the commodity, create Stretch, and offer that to people that can then take it, that can take the security Stretch and create another layer, another instrument, and can do it in different forms. So we are seeing different entrepreneurs do this. People are creating crypto tokens backed by Stretch, and they are either creating a stable coin or they're creating something that's a levered version of Stretch. They're actually giving higher yield with slightly more volatility than Stretch. So you can do a lot of these financial engineering plays using Stretch. Or you can also go into the TradFi world and you can do ETFs that are backed by Stretch, where again, you either strip away the volatility and give a slightly lower yield, or you step up the volatility and give a higher yield. People can integrate it into model portfolio services. People can create private funds or mutual funds or public funds. So it just becomes like a universal ingredient of sorts that people can use and plug in to their financial products. And that's what we are seeing a lot of entrepreneurs do. Like what you pointed at was, what should financial entrepreneurs in the space currently think of when they're thinking about the Bitcoin treasury space? I think the model that we've pioneered a strategy, which is raise equity, buy Bitcoin, then issue some sort of debt or fixed income or preferred equity against it and buy more Bitcoin, is an excellent model. But there are some um, limitations in terms of the scale you need to achieve to be able to, get the flywheel going. And if you're not able to reach that scale quickly, a very interesting play is to take Stretch and put that into financial products that are relevant for your country. Could be outside the US as well, could be in Europe, South America, Asia, could be anywhere over there. Could be driven by the relationship that you have with your regulators, which allows you to get to the final finish line before someone else can. And strategy ourselves, we will not go and issue that in that jurisdiction or that country. So that gives a very interesting sort of opportunity for entrepreneurs who want to build in the space across the world, not just the US. So I think that's what we are seeing. We're seeing a lot of young, talented people that have been trying to build in the Bitcoin space for a while, but have struggled to find the right idea. Now they're finding this really unique sort of moment in the Bitcoin world that has not come in the last 2-3 years, where the barrier to entry has really stepped down a lot for creating something that's backed by Stretch. Because there are a lot of interesting Bitcoin plays that have happened in the past, startups around exchanges or custody, or just multi-sig setups or hardware wallets. And those are really, really useful and really big innovations and big startups as well. But this is creating a whole new class of startups, a whole new class of opportunities for people. So yeah, I'll take a pause there. Happy to answer anything else.
Yeah. You see a lot of talk about Strategy has a digital credit product. Strive has a digital credit product. But it takes a certain amount of seed capital, of startup capital to IPO one of these vehicles. Do you think some people are missing the opportunity or not talking about the opportunity of doing stuff in the private markets? Because I've heard of private companies that are saying, well, maybe we keep our company private, but if we can get a private digital credit product to a certain point, then maybe we just IPO the digital credit and keep what would be the common stock private. Or also the opposite. You have a public Bitcoin treasury company, but they can launch and raise money in the private market digital credit product. It doesn't necessarily have to be like we don't have X amount of Bitcoin and X amount, like we don't have size, and so we can get to that preferred product digital credit. Like, do you think that's worth inserting more into the conversation, or is it out there being talked about and acted on, or that kind of an opportunity maybe in the market?
I think it's a very interesting opportunity. I personally have seen a little bit of activity over there based on the sort of vantage point I am at Strategy, and I get to speak with a lot of people in the industry. But I don't think it's really taken off in a big way, where people are finding other flavors of equity and credit instruments that they can create that are backed by Bitcoin. And as you're pointing out, it can happen in many different vehicles and many different flavors, where it could be, a form of private equity or private credit product that is superior to the traditional ones because it's backed by Bitcoin. It's perceived to be a bit more risky, and hence the investors demand a slightly higher return, but that also creates that more compelling instrument, which will then have in turn higher demand from investors. And people are also trying to fuse real estate into Bitcoin as credit or as collateral. And that can have a very interesting sort of pool of capital that's chasing it. Because what you will see, I think, over the next 5 or 10 years is all existing financial products will find ways to become slightly better and upgrade because of Bitcoin. And right now, there is this big conversation around the cracks that are emerging in the private credit industry. And you can argue that, digital credit is far superior to private credit. And you will see a lot of migration of capital from the private credit ecosystem to digital credit, which I think is true and will happen. But you can also make a case for why private credit itself can become better if they integrate Bitcoin into the way they structure their credit instruments. And I think that is the future, that every single financial instrument and financial institution and financial intermediary will find ways of fusing Bitcoin into what they do and what they sell. And they will just make it more attractive. And the ones who move faster will capture more market share. And the ones who are more traditional and risk averse will just be laggards, and then they'll lose market share. And I personally am very bullish about the idea of private equity doing something like the original Strategy model, find a cash flow positive asset that maybe has low growth. So you can buy it at a low multiple of their revenue or their profit. And then you just lever up on that asset and you issue debt against the assets of the company, and you borrow from traditional banks that are underwriting loans to typical private equity buyouts, and then you just buy Bitcoin on those balance sheets, and then you just keep doing this again and again with different assets in different geographies. And in effect, what you're creating is you're creating Bitcoin backed credit for the banks that are underwriting loans for private equity buyouts. So I think more of that will emerge with time, and you just need these radical individuals that are in good positions in different industries to take the lead, or young entrepreneurs to build more credibility and then break into those ecosystems and do these plays.
Awesome. Where's the best place for people to reach out to you to connect?
They can find me on Twitter. My handle is CJ_Bitcoin, as you pointed out. And I'd encourage everyone to check out Strategy's dashboard. I guess most of your listeners might be familiar, but if they aren't, they should go around and play with strategy.com and download the data that if they wish to, or look at the charts that we post over there. And if they have any recommendations or complaints, they can share that with me as well via DMs on Twitter, or they can just send me an email as well at cj@strategy.com.
Awesome. Hey, thanks for your time today. Appreciate you joining the digital conference.
Thank you so much for having me, Tim. Looking forward to the next one.
Absolutely. Welcome to the Bitcoin Treasuries digital conference presented by Salt Lending for March 19th, 2026. Today, we're bringing together leaders, investors, operators, and analysts from across the Bitcoin Treasury ecosystem to explore one of the most important shifts happening in global finance, the rise of Bitcoin as a corporate treasury asset. Over the past 6 years, we've seen a growing number of companies adopt Bitcoin on their balance sheets. From public companies to private firms, a new financial strategy is emerging. One that combines traditional corporate finance with the long-term monetary properties of Bitcoin. Throughout today's conference, we'll be speaking with executives, investors, and industry experts about the strategy behind Bitcoin Treasury adoption, risk management and corporate governance, capital markets and Bitcoin-backed lending, and how companies are thinking about Bitcoin as a long-term reserve asset. A big thank you to our presenting sponsor, Salt Lending, for supporting this event and helping to move the Bitcoin financial ecosystem forward. Before we begin, a quick disclaimer. The content shared during this conference is for educational and informational purposes only. Nothing discussed by our speakers should be considered financial, investment, legal, or tax advice. Please do your own research and consult with professional advisors before making any financial decisions. Stay with us. You didn't build a Bitcoin treasury to sell it. You built it because you understand sound money and you plan to hold through cycles, through noise, through everything. That conviction is the strategy. But growth doesn't wait for the perfect exit window, the deal, the expansion, the next move. Those opportunities are now. Salt lets you borrow against your Bitcoin and fund what's next without touching a single sat. Your thesis stays intact. Your business moves forward. Talk to the team at saltlending.com. Built for companies that think in Bitcoin.
We're Giga, a Bitcoin treasury company turning digital assets into real-world innovation. We're changing the U.S. building envelope market with high-performance facades and windows using technology and AI to power advanced manufacturing. With over 30% annual growth and strong margins, we're scaling with vision and innovation. Stacking Bitcoin since 2021, driven by our deep belief in it and a mission to become one of the top global Bitcoin companies. Discover what we're building next.
Spreadsheets, CSV exports, blockchain explorers, tax, season, panic. Sound familiar? Bitcoin accounting doesn't have to be chaos. Bitmint is a Bitcoin native accounting infrastructure. Connect your wallets, transactions import automatically, cost basis tracked to the lot. Bank style statements and tax ready reports. Bitmint, clarity from day one.
There's a new way to retire. With Bitcoin IRA, you can invest in crypto 24/7 with tax advantages, giving you more ways to diversify and grow your retirement savings. Choose a traditional IRA to defer taxes or a Roth IRA for tax-free withdrawals later. Either way, you can grow your portfolio and pay less in taxes. Setting up your account is fast and easy. It only takes 3 minutes to get started. Take control of your future with Bitcoin IRA.
Everyone should be able to save and protect their wealth across generations. We built this company so billions of people around the world can take control of their financial lives. We've reimagined savings and protection from the ground up with digital money and modern technology. We're the world's first Bitcoin life insurer. For the first time, people can save, protect, and pass on their wealth entirely in Bitcoin. 4 years ago, we started working directly with individuals. Today, as the Bitcoin economy has grown, some of the world's largest and most conservative institutions are joining us in our vision. Every economy is built on patient, long-term capital. Bitcoin is the foundation of the next phase of global finance. We're not just building a Bitcoin company. Meanwhile is the backbone of how everyone will save in the future.
Football Tech, where soccer and technology meet the power of Bitcoin to transform the future of vulnerable communities. This is what Bitcoin philanthropy looks like. Soccer, technology, and Bitcoin. Join the mission. Help change the game at footballtech.org/Bitcoin.
Run your company at machine speed. Not using AI, you're already behind. Meet Orchestrator, built for Bitcoin native companies. Build, deploy agents, automate treasury and marketing. Close your books 5 times faster with zero spreadsheet drag. Cut manual work by 90% with 100% accuracy, with non-custodial automation, full audit trails, and human-in-the-loop approvals for every critical decision. To learn more, visit bitcoinorchestrator.com to schedule a personalized walkthrough with our team.
Debt is exploding. Bond yields are
Welcome back. I'm excited to welcome to the stage Hunter Albright with Salt Lending.
Tim, it's great to be here.
Hunter.
I'm doing well.
Good to see you as always.
Likewise.
For those unfamiliar, you tell us a little bit about yourself, your background, and how Salt came to market.
Yeah, I'd be happy to. So I'm Hunter Albright. I'm the Chief Revenue Officer at Salt Lending. I have been working in the lending and payment space for over 30 years now, having run large global credit card and loan portfolios and served on the UK advisory board of MasterCard, and have really been in the space, really looking at how to help companies and individuals with liquidity and payments, for a long time. I got into Bitcoin around 2017 and sort of went down the rabbit hole and have been doing more in that space ever since. And met up with because Colorado, and Salt was founded out here by Sean Owen and sort of a group of founders who really were struggling exactly around the problem that we're talking about today, is like, how do businesses that have Bitcoin on their balance sheet get some value out of it? And that really was the founding story around Salt, to help solve that problem. And really excited to be helping represent the team that is building great technology and helping companies globally do just that.
You mentioned 2017. Of course, you remember in 2022, coin lenders kind of blowing up. Can you kind of walk us through what Salt does differently to avoid what now might seem like very obvious risk?
Yeah, I think so. I think it's a question that comes up frequently. And I think the real question for Salt, right, having been founded in 2016, is not that necessarily what we're doing differently, but what are we continuing to do? In many respects, what we did back in 2022 and we continue to do now is really the foundation of why we've been able to navigate the market volatility and really help our customers do the same thing. People understand strategy, and strategy is really helping provide, fixed income and income options without a lot of the volatility on sort of the income side of the digital credit sort of coin. And we're doing the same thing, but on the liquidity side. So really helping take out volatility with a lot of the capabilities that we have on our platform and our products and the service that we're offering. And so when I look back at 2022, that's a period where the volatility and sort of the issues with companies within the space was driven by management decisions, driven foundationally around some of the approaches of risk management and overall product structure. And we've really worked hard to make sure that all of the offerings we bring to the market, have that protection in place to ensure that our customers' Bitcoin stays their Bitcoin.
Got it. Talk about rehypothecation. Like, what is hypothecation, and does Salt rehypothecate customer Bitcoin, and like how should you think about that risk when it does happen in the market?
Yeah. So to answer your question directly, no, we don't rehypothecate. When a customer's collateral is deposited on the Salt platform, it is there to service their loan and only their loan. And actually, the rehypothecation was one of the key issues going back to 2022. And at the time, we often got asked a lot about, hey, can you match this other lender's rates? They were really low. And we honestly said, we don't know how they're doing it because it doesn't make sense. And so I think if you have rates that are too good to be true, it's probably a good prompt for you to be asking your partner or the company you're looking at working with how they're generating them. Rehypothecation is generally you know, means that the lender is taking your collateral and looking to make a profit on it somewhere else. They're either trading it, they're re-lending it, but they're not sort of just using it to service your loan. In many respects, I would say that one of the things I've learned from being in lending for so long is like lending really should be a boring business. You know, we're taking on and we're trusted to protect customers' collateral. And we're really looking to get paid for providing that liquidity service and not doing anything else with the collateral.
Got it. Key to custody, how is custody handled at Salt? Who actually controls the Bitcoin, and what protections are in place for clients in that regard?
Yeah, one of the things that companies and customers come to us for is really to be their Bitcoin credit partner, right? As people invest a lot of their time, effort, and money to acquire an asset on their balance sheet, they want to be able to leverage the value of it, but they also want somebody that's going to help them do that effectively. And so at Salt, we provide expertise and support in that sort of partnership to help them get the value out of it. But custody is a key part of that overall equation. We work with institutional grade custodian providers. We're custodian agnostic to ensure that, one, we can distribute the risk, but also if a customer has a specific preference regarding a custody provider, we can work to meet that so that we do have flexible solutions around that. And one of the things I want to sort of come back to on the custody side is, you know, we really look at the security of a customer's asset being sort of a, you know, let's call it a trust stack. You know, at the lowest level is rehypothecation. And so if somebody says they rehypothecate and they're using your collateral for profit-making purposes in other manners, then, you know, in many respects, that should stop the conversation, right? The next level is really thinking about the custodian architecture. And as we are custodian agnostic, we look to have multiple custodians so that we can distribute the collateral, but also provide the custodian solutions that customers want, and work with institutional grade partners. That's really critical. And then the next layer on top of that gets to the regulatory accountability. And so we are the most licensed lender in the United States. We have been always very proactive to work with regulators on the individual licensing as well as the business licensing. And so that's a level of scrutiny that we go through every year in terms of our security, our technology, all of our business accounts, and in order to ensure that we can be trusted as a worthwhile and sort of trusted custodian of our customers' collateral. And then the last sort of layer of that framework for us is really the structural protection. So we are continuing to look to add things on, moving towards having bankruptcy remote structures, and we have a lot of that protection also built into our products. So we have a multi-collateral wallet that allows people to manage volatility by a mix of assets. We have downside protection in terms of our stabilization technology. And we have another product regarding Salt Shield where we can, you know, within a fee-based program, help borrowers eliminate all risk of liquidation through the different protections that we have. And so a lot of our experience over the past 10 years of being in the market has been focused on, hey, what have we learned and how can we bring it and help protect customers through the products that we offer?
When you're describing, it more geared towards retail, more towards institutional? Are the lines blurred? And where do you kind of see that going moving forward? Is there a trend of it was more retail, now it's more institutional, or it's only one or the other?
You know, I think the interesting thing about Salt's history is we really started out servicing both from the start. We had a lot of individuals who were early Bitcoiners within sort of the overall environment, and they were borrowing against their Bitcoin. It may have been as individuals, but a lot of them were doing it for business purposes. And then the other element is we were lending and partnering with miners who were acquiring Bitcoin as part of their operations, but needed to be able to tap into the value for operational expenses and capital investment. And so both segments have been really, a core part of Salt's growth trajectory and the product development over the past. I would say that I would, from, 2018 through 2023, 24, the retail side really was probably the dominant growth element of the portfolio. But it's exciting to see more businesses look at taking on Bitcoin onto the balance sheet for, value investment reasons, fiat sort of hedges. And I think that's actually one of the things I'm most excited about in terms of how businesses are really rethinking their own treasury strategies to be able to take advantage of the structural elements of Bitcoin and what that might mean for how they operate their own business.
What has been your interaction with on the corporate adoption side with these Bitcoin treasury companies? Has it been more the miners that you mentioned, or how does Alt fit in to the corporate picture, the corporate story?
So I would say within the corporate story, we serve three primary segments. One are going to be family offices and trusts who are acquiring Bitcoin, structured as a company, but really looking at acquiring Bitcoin for multi-generational wealth and for leverage for other investments and also income producing. So that's an element where when we talk to companies about the strategy there, they're trying to balance out, how do I get income off the asset? How do I look at borrowing against it for additional investment? And then we do a lot of work with what I would refer to as small and medium-sized businesses. And I've done a lot of advising. I'm an adjunct faculty member at the University of Colorado and do a lot of work on strategy and entrepreneurship with rural and small and medium-sized businesses. And it's exciting to see companies like restaurants where they can acquire a half Bitcoin or 1 Bitcoin and really have that be significant in terms of their financial outlook, being able to avoid having to go through regional credit processes in order to get approved for a loan. But having an asset on their balance sheet that allows them to play a bit of a different game, both in terms of if they have a down month of revenue, having access to cash so they don't have to lay off employees, as well as if they see opportunities, being able to get access to cash more quickly for investment. And then as we are traveling globally and talking to larger companies, both public and large private, the interest in the acceptance of Bitcoin now as a viable asset on the treasury is exciting, right? Because that now they are looking to accumulate more and gives them more flexibility about how they can deploy that value, both strategically and operationally.
Can you walk us through loan to value, margins, how to survive Bitcoin's volatility, some of the realities that in just operating?
Let me give you a little bit of an overview of, I would say, how to think about borrowing against your Bitcoin, and then I'll highlight some of the things that at Salt we do a little bit differently, and that might be interesting to sort of consider. So LTV is a key, stands for loan to value ratio, and it's a really key indicator, essentially, as the riskiness of the loan. So if you have a 70% LTV loan, for every $100,000 of Bitcoin, you're getting $70,000 in cash, and so you don't have a lot of room in terms of if the market drops, when you're going to hit sort of margin call thresholds, and you're going to have to act in terms of depositing more collateral. For a lot of the companies we work with, they tend to favor lower LTV loans, 30 to 50% LTV sort of target points. So they have a lower risk of sort of tolerance, and they want to sort of be more conservative in terms of how they're managing their loans. And so we work with companies to, one, understand how to think about that, and then how to leverage it. We have products that, first of all, multi-year in terms of their structure. We offer 1, 3, and 5-year loan terms. And then within that, the margin calls, we have the highest margin call threshold in the industry. And there's an important point to call out here. For a lot of issuers, there's say a 65 to 80% LTV threshold where they liquidate customer collateral. And it becomes more of a terminal event. And one of the early innovations at Salt was creating a technology that referred to as stabilization, where for us, 90.91% LTV, a customer's collateral gets swapped into stablecoin. And so this is really a way for customers to take a breath and have a little bit of we've talked about it from a sports metaphor perspective, a bit of a timeout. Like if the market's really dropping and you don't have the dry powder or additional collateral to bring to the table, it gives you a chance to catch your breath, figure out how do you pull together assets, and also when do you want to get back in. And that's really been a feature of our platform that customers have appreciated. And we have further extended that by adding Salt Shield, which is for a fee, we remove all margin calls. So allow people to then sort of, basically service the loan, make interest payments, and have a longer term loan really almost act like a home mortgage, where if the value of your home goes up and down, you don't have to worry about any additional collateral, just keep making your payments. And then when the loan matures, we reconcile with the customer in terms of the overall value and any outstanding amounts.
Got it. That sounds much better than some other things I've heard, just to be, I guess, kind of move towards wrapping, like at a high level, what's kind of the core philosophy behind Salt? You did, a few things earlier, but are you trying to be like the safest lender, the most efficient lender, both those, something else? What should people kind of think when they think of Salt lending?
Yeah, we're really building a company and a group of individuals, expertise and products to be somebody's Bitcoin credit partner. When we look at the value of Bitcoin as an asset going forward, there are a lot of decisions that need to be made in terms of how do you get the most value out of the asset you've worked hard to accumulate. And so there are a lot of people out there that are willing to just lend. That's not the game we're really trying to play. We want to be somebody's trusted Bitcoin credit partner. And what that means for us is providing sort of an elevated level of service. You can always talk to an expert to help you with your loan, help you think about it. If borrowing against it's not right, great, we'll tell you that. We're continuing to work on providing more of the downside protection as we talked about. So providing, building on stabilization, building on Salt Shield, as we know that, everybody wants to keep their Bitcoin. We're in, a lot of people are in this for the long-term value and appreciation of the asset. It's important to be able to get short-term liquidity and cash out of it, but we also don't want you to ever lose it. Your Bitcoin should stay your Bitcoin. And then we're continually to work on other custody options for people to choose from, as well as partners that we integrate with, so that, especially from a company perspective, you have the information you need, you have the reporting that you need to be able to manage your full treasury as effectively and proactively as possible.
Got it. Where can people reach out to Salt and out to you individually to learn more and have a conversation?
Yeah, would love to have a conversation. That anybody, if they're interested, I can be found on both X and LinkedIn at Hunter Albright. And then if you want to learn more about Salt Lending, go to saltlending.com. We have different pages for companies as well as for the private clients, individual small businesses that are looking to take out larger loans. I encourage people to book an appointment with our expert staff. They're great at helping sort of think through the questions, some of the opportunities, and first and foremost, to figure out whether if a loan against your Bitcoin is the right decision for you.
Awesome. Well, Hunter, thank you for joining us on the digital conference today. Definitely appreciate your time and kind of walking us through some of these nuances that are obviously very important when people are trying to make a decision about who to have a conversation with, partner with, and work with obviously in a lot of cases like the most important asset that they own.
Yeah, I agree. And Tim, I appreciate the opportunity. Love what you're doing in terms of helping educate and expose more companies for the opportunity of Bitcoin. I think it's something that is really helping bring more of the sophistication of treasury management strategies to any company, regardless of their size.
Absolutely. Thanks, Hunter. We'll talk.
Very good. Cheers. Thank you, Tim.
Cheers. There, we are going to bring to the stage Kurt Wuckert Jr. He's one of the most outspoken and controversial voices in the broader Bitcoin and blockchain space. Kurt, thanks for today.
Tim, thanks for having me.
Absolutely. First of all, great background. If you just found the exact writing, but it looks great. It looks green, and we're all fans of candles, right?
Absolutely. Yeah. Thank you.
Can you give people maybe before I dive into the spicy stuff, a little bit of your background, how you found Bitcoin, and how you came to wear a colorful shirt with a green background?
So yeah, I've been a Bitcoiner since 2012. Somebody offered to pay me Bitcoin for a printing job. I owned a printing company in Chicago back then, and that was how I got into it. I was in big libertarian circles, and I owned the company. And they said, "Hey, we should pay you in Bitcoin." And I didn't know what it was at the time. They told me it's like video game money. My question was, which video game? And they told me, no, every video game. And so I was pretty impressed. And since then, I pivoted really hard. 2013, I started mining. In 2017, I went full-time in the space. I run mining operations, hash power operations. We own a Bitcoin scalability research and development firm, and a whole bunch of other stuff. So we're working full-time in the blockchain space for the last 9+ years. And then I do investigative journalism, host a podcast, and talk quite a bit about the culture of Bitcoin and what's going on in the broader blockchain space.
What has been, from your vantage point, kind of this corporate phase that started with public companies putting it on their balance sheet, now convertible debt along the way, now these preferred instruments? What's your take on everything to date kind of going? And I mean, I guess you said Bitcoin treasury companies are going to zero. So is it more nuanced than that statement, or what are you thinking?
So on the one hand, I mean, it makes a lot of sense, right? Bitcoin's a commodity. It works. It's implemented as a cash system, but its underlying tech very much mimics gold. And so it makes sense as an underlying commodity for all kinds of things. Now, my problem, and the reason I say that treasury companies are going to zero, is I think that, the United States in general, the Western Hemisphere in general, I think is over financialized. We're losing productivity. We used to be an extremely productive nation, and now we're a highly financialized nation. Bitcoin was designed to speed up commerce on the internet. It was to make micropayments possible. It was supposed to undercut Visa, MasterCard, and PayPal. Circa 2008, that was what people were doing business with on the internet, and Bitcoin was designed to disrupt that industry. And its inbuilt economics were designed such that the mining subsidy, goes down every 4 years, and at some point must be replaced by transaction fees. And so there's a whole model built into like the macroeconomic aspect of Bitcoin itself, but also the macroeconomics of the Western Hemisphere in general. And I think both are going the wrong direction. It's great if you're in the financial class, and if you're an asset holder, great. We're all getting rich. Bitcoin's made a lot of people fabulously wealthy, and that is certainly not something to complain about. But the problem is that if we are an unproductive people and taking what would be productive assets and using them in an unproductive way, well, then, that looks like societal collapse, the likes of which I don't really want to experience. And so I call to people like, look, we need to be using Bitcoin for more than just its financial, absorption capabilities. Bitcoin should be able to create abundance, not just absorb capital. And if we don't do that, I really think that Bitcoin is going to cease to be a good investment in the first place. And so that's my basic thesis, is that look, we've got the financial stuff figured out. Like wealthy people and wealthy businesses have a lot of ways to make money and send money and all these other things. And Bitcoin really was designed to sort of give the power back to the little guy. And in a lot of ways, it hasn't really done that, unless you were lucky enough to be an early adopter, in which case, again, I'm very happy for those people, but I'm concerned that it's going to cease to be a disruptive technology unless we all kind of wind this back a little bit and get back into building things with Bitcoin, building things on Bitcoin, and giving it some fundamental value other than its balance of supply and demand.
My mind is reeling good way, meaning I'm trying to like, if you start from Bitcoin doesn't need anyone, right? Bitcoin, it's historically, unless you have an exchange, kind of like a Bitcoin business, right? So is there maybe a place for these corporate adopters to have some legitimate like education, advocacy, workshop programs, things to really educate and bring it back to the people? Or is that me just trying to make corporate adoption into it's okay, we're the corporations and we're here to help you?
Right. Well, I think there is a big opportunity there. Like even just for simple things like on-chain identity attestations or having encrypted communication. Like a lot of people ignore the bit part of Bitcoin. Everybody's focused on the coin aspect, which is very clear. It's easy to understand. But the bit, the data aspect of Bitcoin, like Bitcoin was implemented with a rich scripting language that allows people to bootstrap simple and complex smart contracts and do all kinds of and we've seen a resurgence of this a little bit over the last like 3 years with the ordinals boom and some of these other things. It's kind of a re-exploration of some of the stuff that was being worked on quite a bit, circa 2015. There were some pretty serious tokenization projects and some other things going on in the Bitcoin space. And the fight over whether Bitcoin should be for that sort of precipitated the Bitcoin civil war, which then gave us 10,000 plus altcoins and Ethereum and all this other stuff going on, which I think is problematic because it just adds confusion, adds lots of disparate networks that don't communicate with each other very well. When in reality, I think these Bitcoin treasury companies absolutely should be looking at ways to use Bitcoin, even using the assets in their own treasury to do things like communication over the network or to use, set up a smart contract. Like, why not build your escrow and derivative systems in Bitcoin? Like, why have it off on another ledger? Your attestation, it's kind of a trust me bro situation, which has been a big criticism of these treasury companies in the first place. It's like, well, where are your assets? Like, why don't you tell us what wallet addresses they're in so that we can audit you publicly? Like, these are all things that Bitcoin was designed to enable. But in reality, most companies are using Coinbase custody or some of these other custodians, and like they're not even actually holding the asset. They're not using the asset for anything that it's designed to do, when in fact, there's a lot of opportunities to do some really disruptive things with the technology, including in a financial derivative standpoint. And so, yeah, there's a lot of opportunity. I think people are a little bit afraid to explore it because that's been one of the things in the culture that's been pushed back. Like, don't do anything with Bitcoin. Don't spam. Everything's spam lately. And that's the big conversation for the last year again, too, with this core versus not argument. Like, no, everything is spam unless it's just a singular financial transaction. And I always push back on that and say, look, Satoshi Nakamoto created a rich and powerful scripting language in Bitcoin that allowed for lots of complex transaction types that allow for applications essentially to be running in the stack in distributed consensus. And that stuff is awesome. And some of these companies have tremendous budgets that they could be figuring out some really novel things to do with the tech, which then, in my opinion, is adds to that underlying fundamental value of the asset they're holding in the first place.
So let's talk leverage and risk.
Yeah.
What are like the red flags for Bitcoiners, for investors, when it comes to, call it just counterparty risk, to look like, okay, maybe somebody wants some Bitcoin and they want to go have some fun with some equities that are backed by Bitcoin. Um, what's kind of your lens on that?
Well, I think, with a lot of things, if you're looking at a treasury asset, like what is it actually doing? We're trying to figure out, okay, who holds the coins? Where is my leverage? Like what is the fractional reserve on these things? Like one of the big criticisms has always been, well, my bank doesn't even actually have my money. And so what if your derivative asset isn't actually backed by any of these things? And we get into these problems once every 10 or 20 years, and we have a big panic and a big crash and bankruptcies and all these things. And like Bitcoin gives us all kinds of tools to make sure that absolutely doesn't have to happen. And so the fact that people are using custodians, they're using third-party attesters and all these things really shows me that there's funny business going on, when in reality, there should be a smart contract locked wallet address that tells people how much there is, how much leverage there exists against the asset. Like by all means, run a fractional reserve. Maybe you've got 10 times as many loans out as you do actual collateral. But at the very least, you should explain to people that that's the case, because Bitcoin gives you that ability. And if just working with knowledge makes a more honest economy, I think a more honest economy becomes a more productive economy. And if we can remove trust, which Bitcoin fundamentally allows us to do, it just lets us have honest business. It actually lets more average people participate in some of these financial vehicles as well. Imagine a small business owner, maybe he's worth $1 million or $2 and says, you know what, I could be lending out $100,000 a year right now, and there are ways for me to do that. Bitcoin gives a person like that opportunities to compete with your JP Morgans or whoever else that have much larger portfolios, obviously. And so I think there's a lot of really cool things to explore there that then allow your sort of mid-level entrepreneurs to come up a level and become truly competitive with your Wall Streets of the world. And I think that would be a net good thing. And it's something that absolutely the companies that are participating in this economy right now should be creating those tools. If you bring up the middle class in a given economy, that it creates more purchasers, it creates more demand, it creates more opportunity for everybody. We all live in a net wealthier society, and that has spillover benefits that absolutely benefit all of us.
You kind of argue that treasury companies represent financialization over production, but couldn't Bitcoin actually protect productive companies from fiat debasement and allow them to invest longer term?
I think in an ideal world, sure. You can certainly make a utopian model and a prospectus that makes that argument. My concern, though, if you think of the 100 most valuable companies in the world, if a company like MicroStrategy, or Strategy rather, becomes particularly successful, the spillover effect of that is that companies like Apple or Microsoft or Anthropic or OpenAI, they're going to look at that and say, we actually have a fiduciary duty to our board to be taking money away from other things and putting them into Bitcoin such that we are raising shareholder value. And if that happens, the more that it happens, then the more you're incentivized to take money away from research and development, various types of human resources, reinvestment in all kinds of infrastructure and those sorts of things. And then that increases the financialization, and it decreases the productivity overall. And so, just on a consumer level, imagine if Apple made the announcement that, like, look, we're going to be putting $5 billion a year. We're going to be taking it out of a few other modules of the company, and we're going to be putting that into Bitcoin just because we have to. The board of directors demands it so that we raise shareholder value. But as a consequence of that, we're only going to put out a new iPhone every 18 months instead of every 12 months. Our MacBook cycle, we're going to move out to a 24 to 36 month cycle. So, get used to not upgrading your equipment every year, because it's in the best financial interest of our company to be holding assets to raise shareholder value instead of investing in trying to sell you something that you actually need to make you more productive. And that's just one example. Imagine the big steel companies, big shipping companies, agritech, and all these other things doing the same thing. Like, hey, everybody, sorry, we're going to be producing less food, we're going to be producing less steel, we're going to be producing fewer cars, we're going to be producing less medical equipment, all of these things, because we make more money by doing nothing over in this this financial derivative Bitcoin economy. And that's my actual concern. Is I'm concerned about the basic model in the first place, but I might actually be more concerned that the business model is successful, because the consequence of that is a general slowing down of productivity for the sake of absorbing more value in this corporate structure. So it's kind of a sword that cuts badly both ways, the way I see it.
Could there be maybe a middle ground there where, in your example, Apple puts $5 billion of Bitcoin on their balance sheet, and maybe it's a number that would have been used actively, maybe not, maybe it's just that melting ice cube of fiat, but let's say it would have been used more productively. Is there maybe a middle ground where they could do a very conservative Bitcoin yield strategy that's kind of like principal protected option strategy, nothing crazy, like low, or not low, but like single digit or low double digit kind of yield, and then on top, or in addition to that, maybe taking a very low LTV loan to kind of have the best of both worlds? Or is that a little realistic?
I think every company will treat that opportunity differently. I think if you have a productive company, Apple, for example, is making a ton of money on their iPhones on a regular basis. So they definitely want to have a new iPhone out every 12 months. And, every Christmas, everybody buys buys 3 phones for the family or whatever. But the problem is that if the model is more profitable to do nothing, then that's absolutely the strategy that any company is going to take. It would be a breach of fiduciary duty to do anything different. Like they have to look at what's actually functioning. And so if you say, look, if we build anything that's actually making us less money than doing nothing and holding this asset, what would you do, right? I mean, the company's CFO is going to look at that and say, hey guys, we got to keep hacking away at the productive parts of the company for the sake of this more profitable part of the company. And that's going to be an antagonism that exists if the model is successful. Now, you're right. Obviously, you can hold the Bitcoin, take out a loan against it in order to continue to reinvest in more R&D and more production or whatever. But then the argument is, well, if it's that much more successful, you should just take out another loan and buy more Bitcoin with that loan, if that's going to make you even more money than producing your product. And so my concern is that for a time that will make sense to continue to be the company that you are, but the more successful the business model is, the more productivity leaves the economy as a consequence of it.
That sounds fair. You've framed Bitcoin companies as potentially Ponzi-like. So I guess what specifically would need to be true for that to actually hold, and where do you think it breaks down, and what are maybe some red flags, or at least considerations, that people like all spiciness and society should actually be thinking through when they're learning of any of this? Because I argue most people in the world don't even know this stuff exists and yet.
Sure. I mean, these are novel financial vehicles. Like, to invest in the stock of a company as a leverage play against Bitcoin is itself an idea that didn't even exist 4 years ago. Now, if I were to invest in any of these, I think the only one that's worth anything is Strategy itself. The reason for that is it's a 25 or 30-year-old company at this point. It has an existing software business. The software that is being sold by Strategy is going into the Department of Defense and the FBI, and like they're making business intelligence software that is actually a valuable product. And so you can say that, look, this is just a treasury strategy that works in an otherwise productive company. And therefore, the company shouldn't go to zero, because there is a legitimate customer base and cash flow that is not related to Bitcoin. Now, I know increasingly the cash flow at Strategy and everything else going on at that company is based on its Bitcoin treasury. But at the very least, that they have that. Now, looking at all the other companies that have come up after it, some of them much worse than others, they're pure treasury companies. They're literally just saying, hey, the asset is Bitcoin. And, in some cases, these companies are going out and buying pink sheet businesses, or buying the the lowest value company on the NASDAQ and saying, hey, we're just turning you into a vehicle for this financial game. And I think some of those are just crystal clear Ponzi schemes in the first place. And so from a red flag standpoint, I would look at the company and say, okay, is there anything else that this company does other than buy Bitcoin and sell stock? And if the answer is no, you're already talking about a very, very risky asset in the first place. Like Bitcoin drawdowns are not insignificant. We've seen 85% drops year over year, especially for long-term Bitcoin holders. And that's fine when you can just hold through, you hold the asset and whatever else. But when you're playing with a leverage derivative in the form of some company's stock, and that company is otherwise not doing anything else to undergird their value, that's a huge risk. And so I think a lot of those are going to get washed out. They'll probably get bought up, they'll be bought up by the bigger companies, the ones that are actually doing something with the capital that they have. But it's just a very weird model to me. It's just another representation of the problem in the Bitcoin space, saying that all anybody's doing in the space is writing articles and podcasting and bickering on the internet. And, we've built a multi-trillion-dollar market cap out of an asset that is controlled by that. What else is being disrupted? And I also say to everybody, Bitcoin to date, as far as I'm aware, has not put a single person working in Wall Street or otherwise working in finance or fintech, hasn't put them out of a job. So I think a fair argument is that Bitcoin has failed so far to disrupt. Nobody's lost their job because of Bitcoin. And until Bitcoin starts to actually replace people in the real economy, it remains a risky asset in and of itself. And that risk is totally fine when you're holding it. But if you're financializing it, you're creating derivatives on derivatives on derivatives. It's like the housing crisis, except for you can't live in your Bitcoin, you can't eat your Bitcoin, you can't drink your Bitcoin. And therefore, the liquidation that happens to unsophisticated investors is going to be particularly problematic.
I guess following that line of thinking, is AI less risky than Bitcoin because AI is disrupting people's jobs?
It's a tough one. So one of the big things about big changes in industry, look at the railroads, for example, or when the internet companies started to lay down fiber optics, they spend way too much money on infrastructure. And a lot of the initial companies that do that work end up going bankrupt. But at the end of it, we still have trains and we still have the internet and we still have telecom and these things. So other companies pick up the assets and they repurpose them into something valuable. AI is a similar thing where we're building these massive data centers. The problem is that the cost of these data centers and the obsolescence cycle of data centers necessary for running AI is, like a train track will last you 100 years. An AI data center is obsolete inside of 24 months. And so the money being invested there, I also think is very risky. To your point, a company like Anthropic, for example, they're taking software engineers and software developers and turning them, 100 times more optimized. Like they're exponentially more efficient, which then has a net benefit to the economy. And so even if the underlying infrastructure, gets themselves into deeply into the red, which I think it will, at the very least, the tooling is still very disruptive. It allows you to ship software inside of weeks that would have otherwise taken you months or quarters. And that's a good thing. And so I think it's worth going through that boom bust cycle and figuring out where everything actually sits. So it's also risky. I think there are a lot of overvalued AI startups, especially on the infrastructure side. But the tech itself is so disruptive. I think everybody has an incentive to get it figured out and do it right.
Where can people connect with you and all the work that you're doing?
So I have a website, kurtwilkertjr.com. I'd be very happy to take contact me from anybody looking around. I'm also active at kurtwilkertjr on X and all over the place. So if you want to follow me on X, follow my YouTube channel. I do Kurt's podcasts, live Q&A live stream every Tuesday at 2 p.m. Eastern Standard Time, and write a few articles a week. And it'd be great. I'm happy to connect with anybody that wants to chat.
Awesome. Well, thank you for joining us today. Super appreciate your time. Nice to meet you. And we'll have to get you on the Bitcoin Treasuries podcast here sometime soon.
Sounds good. Thank you, Tim.
Thank you. And we'll be back with Ed Julien and Adrian Morris in just a moment. Stay with us. Welcome to the Bitcoin Treasuries Digital Conference, presented by Salt Lending for March 19th, 2026. Today, we're bringing together leaders, investors, operators, and analysts from across the Bitcoin Treasury ecosystem to explore one of the most important shifts happening in global finance, the rise of Bitcoin as a corporate treasury asset. Over the past 6 years, we've seen a growing number of companies adopt Bitcoin on their balance sheets. From public companies to private firms, a new financial strategy is emerging. One that combines traditional corporate finance with the long-term monetary properties of Bitcoin. Throughout today's conference, we'll be speaking with executives, investors, and industry experts about the strategy behind Bitcoin treasury adoption, risk management and corporate governance, capital markets and Bitcoin-backed lending, and how companies are thinking about Bitcoin as a long-term reserve asset. A big thank you to our presenting sponsor, Salt Lending, for supporting this event and helping to move the Bitcoin financial ecosystem forward. Before we begin, a quick disclaimer. The content shared during this conference is for educational and informational purposes only. Nothing discussed by our speakers should be considered financial, investment, legal, or tax advice. Please do your own research and consult with professional advisors before making any financial decisions. Stay with us. You didn't build a Bitcoin treasury to sell it. You built it because you understand sound money and you plan to hold through cycles, through noise, through everything. That conviction is the strategy. But growth doesn't wait for the perfect exit window, the deal, the expansion, the next move. Those opportunities are now. Salt lets you borrow against your Bitcoin and fund what's next without touching a single sat. Your thesis stays intact. Your business moves forward. Talk to the team at saltlending.com, built for companies that think in Bitcoin.
We're Giga, a Bitcoin treasury company turning digital.
Ed? Adrian?
Oh.
All right. Adrian, good to see you again, man. I've finally managed to read your thesis just like half an hour ago.
Oh, awesome. What did you think?
Well, as we discussed, I think you're right. I do think that...
Wait. Hold on. You guys are getting ahead here. I'm the host. Sorry. I was on mute yelling at you guys to stop, and I forgot to take it off here. So first of all, let me get rid of this logo that's blocking my head here. Maybe I can move it to Adrian, or no, I'm just going to turn it off. Okay, I'm going to take over for Tim here for a minute while he takes a break. We are going to jump into an interesting topic here, which came up during a dinner that Adrian and I attended at Stretch World in Las Vegas, was sentiment analysis and what sentiment analysis means to Bitcoin price. Bruno, who is joining us from AI Applied in Amsterdam in the Netherlands, and I worked on a startup together pre-COVID, which basically looked at company emails and talked about sentiment analysis. And so when Adrian was talking into my left ear and I'm thinking in my right ear about Bruno, I'm like, I got to get these two guys together. And so we had that discussion a couple of days ago, and it was just a fascinating hour of talking about sentiment analysis and Bitcoin price and price in general. And so I'm mostly going to get out of the way here, but I'll jump in when these two guys get rolling a little too heavy and hard, and I need to pull them back in a little bit. But why don't we start with you, Adrian, and the idea you have for this paper and the discussion we had and why that led to me introducing you to Bruno.
Sure. So the overall thesis is that sentiment is what moves markets. And when I say that, let's be very, very specific in how we're going to frame that, right? So if we think about what sets price in the market, what leads to capital allocations in the market, so on and so forth. The question I often ask people is, If markets are forward-looking, which is something that people almost universally agree on, and if we are looking to allocate capital today for price appreciation tomorrow of some kind, then the question I've asked them is then how can price and how could the market be objective? If everything is forward-facing and if everything is forward-looking and we're always looking towards the future, we cannot objectively know the future. So what that means is, at a very, very fundamental level, that the initiating impetus in the market is always something that's sentiment-driven. It is a forward-facing action towards an unknowable future and towards an unknown future. So therefore, by definition, it cannot be objective. And so what that means is that sentiment, as I define it, is perception, it's judgment, and it's conviction. The reason why it's perception and perception driven is because we do not observe data or information in a vacuum. The information is inert until we observe it and until we analyze it. But that action of us observing the information and absorbing the information, that is a perception act. That's a perception-driven act. And that is something that is impacted by our biases, our subjective knowledge, our subjective opinions, so on and so on and so forth. Moving on to judgment, we then use our perception to drive our judgment of how we assess the information. People like to think that they observe things dispassionately, but in reality, everything you observe is influenced by your perception. It is influenced by your belief systems, so on and so on and so forth, and that impacts your judgment. That does not mean judgment is completely emotion-driven. What that means is your active judgment already has a direction it's going to go, and depending on a variety of factors, that judgment could go left, it can go right, it can go up, it can go down, it can go a variety of different ways. So perception and judgment are embedded within this overall concept of sentiment. And the reason why I say sentiment is perception, judgment, and conviction is that perception and judgment lead towards a conviction that allows you to allocate capital. That final step is the step that you take to allocate capital into the market and to allocate your positions and so on and so forth. And that allows you to become a market participant once you go through that triumvirate of activity. What that also means is that fundamentally, everything in the market is downstream of sentiment. No algorithm is setting price. They're all reacting to price. No passive index fund is setting price by definition because they are passive. They cannot set price in the market. Everything comes downstream of that first initiating action of sentiment engaging with the market. And that happens at the individual level and that happens at the collective level. And that is a very short version of a 30-something page thesis that I've just given.
Perfect. Before you react to that, Bruno, or add on to it, our audience knows Adrian very well. He's one of the leading voices in the Bitcoin Treasury spaces and clearly one of the most intellectual in the space. But why don't you give us, I always hesitate to do this with you, Bruno, to say do this briefly because it's very hard for you to do. But why don't you briefly tell us your background in AI since last century, and then you can get into commenting on to Adrian's thesis.
I think that kind of covers it, Ed. I've been in the field of AI for the past 25 years, last time I counted. So I've seen multiple generations of this technology come to fruition, and I have learned and endeavored to apply it to practical problems. One of the problems, of course, being, in my case, more as a hobby, trying to predict markets. And I think this is one of the reasons, Ed, why I thought it would be appropriate for me and Adrian to talk.
Awesome. So what do you want to add on to Adrian's original thesis there?
Yeah, I agree with Adrian. So from a very, very different perspective, because obviously neither Bitcoin nor market prediction is my daily butter and bread, I did come to the same conclusion. And the direction, in my case, is empirical experimentation. I've been building market prediction systems, or at least systems that try to predict market movements since probably 2004 in various guises and with a new level of technology. And I've lost a little bit of money on it. I haven't really made any in the long term. And my conclusion so far has been that pretty much for the reasons that Adrian very eloquently laid out, markets are inherently unpredictable. What is predictable, and this is something that I have stumbled upon, is very, very short-term movements. So one metaphor that I like to use for that is one of a very, very still pond in which you throw a brick. and this causes waves. Now, this brick, it can be some natural event, it can be something that happens in the world, it can be a large capital injection by an entity that is working in a particular market. And then the one thing that you can try to do, and with some level of success kind of can do, is try to predict a wave emanating from the place where the brick impacted. And if you're very, very lucky, and if you endeavor very, very hard, you can try to predict the beginning of that wave, and you can try to predict some decent idea on where to exit the wave. But you're not causing the wave, so you're not predicting anything long term. So these are very, very short-term predictions. Now, I did have the privilege of reading Adrian's thesis in full, albeit once, so I would definitely need to reflect on it a bit more. And I agree with it. I just would like to add one thing to it. Namely that what you call a judgment that ultimately leads you to particular conclusions, which leads to action, is also a function of information. It is just past information. So past information has formed certain reasoning structures that new information interacts with. This is a new realization for me, so I guess I would have to think about it a little bit more to think through all of the implications. But one immediate implication to me is that if these things are all information, then perhaps modeling through the prism of informational sciences might actually be an interesting approach to better predict waves.
And that's actually part of my larger thesis that I'm working on as well when it comes to the quantitative aspect of my overall thought process. So the thing with sentiment analysis and with any kinds of analysis is, just like I'm trying to frame with how the market is impacted by sentiment, your assumptions color your predictions. So the predictions that you make are a direct consequence of the assumptions that you make. And with that said, if we think through the market as a sentiment-driven engine, and we try to think through different ways to conceptualize it, and if we take an informational approach, for instance, or even if we take an approach of saying to ourselves, the market has multiples and ratios and all kinds of different metrics. How do we create those similar metrics for sentiment? I think we would need a constructive framework, which I think I have. And then we would need a very, very simple assumption that's driving all of the other conclusions that we make. If we wanted to quantify sentiment, and if we think about it in terms of price and valuation, one of the easiest benchmarks is valuation multiples. However, one of the things I talk about is the anchor of one, which means that one is almost a universal anchor when it comes to all valuations. And what I mean by that is, when they say you have a forward multiple of 15, it's 15 times what? 1, right? 1 represents $1 of earnings for one. The market is willing to pay $1 of earnings for every dollar of earnings that the company makes, right? Very, very simply. When you use Bitcoin Treasury companies, when you say MNAV, a NAV of 1 means that your company is valued at your Bitcoin holdings, correct? And any multiple above that is a valuation multiple. So what that means is, if we try to contextualize those multiples and come up with a metric for it that is a little bit more specified, or perhaps, I wouldn't say assumption rich, but context rich than simple profit earnings multiples or MNAV multiples, I think you can then back test that when it comes to predicting information, and then forward model it in a way that has a sentiment-driven focus and treat sentiment as a unit of measure almost. And that's kind of where I'm taking things. And it's very, very funny that you mentioned that you came to the information-driven kind of analysis on it, because that's kind of where I've been going as well.
That's great to hear. And to be frank, I mean, that's a very interesting way of thinking about and modeling it. In the past, of course, I've been modeling sentiment in many, many different ways. And one of them, without going into too many specifics because our time is short, but was trying to predict people's behavior. And in this particular case, very specific behavior, which is obviously much more predictable than general market sentiment. But the way that I have approached that, and what really made it successful in the end. So if we exclude quantitative measurements and stuff that is normally done, has been assuming that there is a driving force in the world that works through psychology and that influences biases, and that in that way adds information to judgment. And that driving force, and I didn't find a better name for it, is spirit of the times. So we called the little module the zeitgeist mechanism. And then the second question was, how do we model that? And the way that we approached it was saying, look, we don't know what's happening in every individual head on Earth, although today we probably can get a much better estimation than at the time when I was doing this. But what we can do is find the collective drivers of mass psychology, if you wish. And one way to model these is actually by observing the news, and by observing the news in very, very high level detail, high resolution, news about everything that's happening in the world. And then from that, we can extract the topics that are happening in the news. Then we can use some standard metrics to try to determine sentiment around these topics, which also evaluates over time. And then presto, suddenly what you have is mathematically an array that represents topics, and then a quantity in every little piece of this array that represents sentiment. And once you have that, you can actually start co-modeling it with all kinds of other measurements that you have, and you're kind of including the spirit of the times, you're including what happens. So one of the interesting outcomes of this at the time was, for instance, that we could find that people react in a particular way when there are wars in the Middle East, which now is topical. Task at Hand was predicting whether people would pay their energy bills on time, and why yes or no. And I can already tell you that people are probably paying their bills on time more often now than they did a couple of months ago when there was no war in Iran. And we also found that certain groups of people react in a very, very similar way when their favorite football, or I guess in the States you would say soccer club, is on a winning or losing streak. So there are a lot of these parameters that can help you gain a better idea about what the judgment of people is going to be without having to go into their heads and without having to breach their privacy. That could also inform market predictions.
Okay, so what I'm hearing is that with time and enough processing power and enough data, there may be a way to model this, but maybe not. So what does the fear and greed index actually measure then? Is the fear and greed index just a rear view mirror into the past, or are we looking at the sentiment of the market?
I refer to the fear and greed index as a narrative fragility index.
Oh, what was that? Sorry.
I refer to the fear and greed index as a narrative fragility index. It is more because the VIX looks 30 days in the past, right? And I think what the VIX is really showing, given the fact that, and again, for my thesis and my framing, that the market is sentiment driven, it is not measuring fear and greed. It's measuring the fragility of a particular narrative. If a narrative of the time is that, to Bruno's point, everything is stable, everything is relatively known, there's no geopolitical events, there's no macroeconomic concerns, so on and so forth, you'll find that narratives that exist at that time are relatively stable. However, in times where there's uncertainty, in times where there are situation in Iran, for instance, or everyone thinks that there's an AI bubble, inflation is high, so on and so forth, it is very, very hard for a narrative to become durable because everyone in the market is looking for holes in the narrative due to the overall conditions. So I think the VIX is not a measure of the market. It is more, and it's not even a barometer of the market. It's just telling you what narratives are overall that are dominant at the time are durable or not. If the narratives are durable, you'll see that reflected in the VIX. If the narratives are not durable, you'll see it reflected in the VIX as well.
Okay. You want to add something onto that, Bruno, or next topic?
Yeah, just that it's an extremely blunt instrument as well.
Okay.
Yes.
It's not particularly actionable. It can be at best a minor bias component, and on its own, it's almost useless. So it's a good thing to talk about, but not particularly useful.
Okay, so let me ask the question that our audience wants to know the answer to, because it drives them crazy on X. Trump announces a strategic Bitcoin reserve, and Bitcoin price goes down. Saylor says he's going to buy 1.2 billion, and Bitcoin price goes down. And there's appears to be no correlation between a big announcement, a brick being thrown into the pond, and price movement. What is sentiment analysis telling us about that? Why doesn't Bitcoin price do what it's supposed to do when we tell it to do what it's supposed to do?
Do you want me to go first, or do you want to go, Bruno?
I can go first. That's fine. So if you ask me, focusing on a particular announcement and expecting a particular reaction is your own bias. You're not modeling the system. You're modeling a small part of the system, and you're expecting a return. The way that you would be modeling price prediction of any asset would be ultimately to try to model, if you wish, all the players at the poker table, to use another metaphor. Because poker as well is a game in which you're modeling the player. You're not really modeling what's happening on the table. In this particular case, you're modeling one player, and you're not caring what the rest of the table is doing.
Yeah, I would agree, and that's kind of what I did. So I did a multivariate analysis on MSTR price action, right? And I've also been doing the same on Bitcoin. To Bruno's point, you cannot look at a single event as a driving factor, unless that single event is unusually large. So what I mean by that is this: if Trump announces an SBR, that's great. If the United States government announces that they're buying 100,000 Bitcoin, that is fundamentally different, because that is a large player that has a large narrative impact making a move into the system. So the event and the reaction to the event need to be proportional. That's the first thing I would say. The second thing I would say is that coming into when it comes to sentiment analysis and the overall concept that can drive it, narrative strength is something that's very, very important. Bitcoin, as it stands right now, does not have a strong narrative. No matter what we as Bitcoiners will say, I've been in this space since 2012. We are now in 2026. The talking points haven't changed. And if the talking points haven't changed, that tells me that we do not have a durable narrative. We have a narrative that's trying to establish itself. And I also say that because if we take a look at how Bitcoin acts, sometimes there's a geopolitical event, Bitcoin goes up, sometimes it goes down. And if you notice, the narrative tends to shift based upon how Bitcoin reacts, right? And that's what leads people to say that narrative follows price. But in reality, that is not true. Price follows the narrative. And the reason why Bitcoin's action is doing these gyrations, and it has been for 12 years, is because Bitcoin does not have a durable narrative as yet. And we are in the process of establishing that durable narrative through MSTR, through the different treasury companies, through the SBR, through the ETFs, so on and so forth. Bitcoin is still becoming crystallized in the market conscience. And until it becomes crystallized, and until enough time has passed, and until enough money has come into the market, I think we're still going to be having these struggles.
Let me put that a different way, Adrian. Let me see if you can make this connection. Instead of saying Bitcoin doesn't have a durable narrative, what about the people who say Bitcoin doesn't care? Is that two totally different things?
That's anthropomorphizing a digital asset. Bitcoin, in the sense, same Bitcoin, Honey Badger doesn't care, right? That's something I've said myself. However, very, very practically, Bitcoin does care because Bitcoin, like any other asset, like any equity, like any commodity, is driven by sentiment. They have no intrinsic value. We are projecting our assumptions of value and our biases of value onto these assets. That is why the market is forward-looking. If the market treated something at value, no company would trade above book, no company would trade above profits, no asset, no commodity would trade above the price it takes for it to extract from the earth. So whether that be gold, whether that be silver, no, Bitcoin wouldn't trade above the cost it costs to mine Bitcoin, right? But clearly that is not the case. So if the overall valuation of these things is based upon our own biases and how we're forward projecting our assumptions of them, they obviously do care about the narratives in the market because they are the direct function of the narratives in the market.
Okay, Bruno, you're in the country made famous for this. What's different between the sentiment analysis on Bitcoin and the sentiment analysis on tulips?
You can hold tulips.
Yeah.
Look, both are speculative, but you would have to dive into economic theory. I'm not an economist, but marginal utility of a tulip, arguably in the age that we're in, is lower than the marginal utility of Bitcoin. So that is one thing that distinguishes them. But other than that, I would just refer to what Adrian just said, because we haven't, first of all, marginal utility would indeed just be the price that it costs to mine it. Secondly, I don't think that Bitcoin has yet established any position or claim as to what its marginal utility ultimately will be.
And that's not to say that Bitcoin is useless. That's to say that the market is still establishing it.
Exactly.
Yeah.
So patience and persistence.
Essentially.
And hope.
And hope.
Yeah.
And hope.
Hope's a horrible business strategy. So where would you two guys see taking this this line of thinking? Where do you think the research needs to go, or how do people need to envision? I know on our call the other day, I asked, is Bitcoin not even a brick? And you guys said, well, it's not even a pebble, or it may not even it may not be making those impacts. But where would you see this kind of sentiment analysis research as it relates to Bitcoin price or MSTR price or whatever going?
Well, what I would say is that using the pond and pebble analogy or pond and brick analogy, the reason why Bruno and I agreed that Bitcoin, we don't even know if Bitcoin is a ripple or if it's actual rock yet, is because the narrative is still being established, and Bitcoin, quite frankly, isn't large enough. Even at 3 trillion market cap, right? If we were to get a huge bump in price, globally, that is still very, very small. It is still going to be acting as a ripple, or is going to be one of the ripples in the market versus a pebble into the pond, right? If the treasuries market, the U.S. treasuries market, that's a rock in the pond. If something happens sentiment-wise and something happens structurally with the U.S. treasuries market, that will create massive ripple effects. However, Bitcoin is still one of the effects in the market. It's not a cause in the market. That said, if sentiment, as I call it, is a substrate of the market, we need the appropriate schema. And I think that with looking at the market from a sentiment-driven perspective, you can create and derive and deduct new metrics and new units of measure within that kind of a framework that you can then model looking back and looking forward. And I think that's where sentiment analysis needs to go. In my view, and I don't know whether Bruno will agree with this or not, sentiment analysis as a whole right now is still operating from a very, very much a concrete aspect, in the sense that you're trying to find a concrete relationship in the data. However, to find that concrete relationship, I think you need the proper abstractions. And I think we need new abstractions in sentiment analysis.
I agree with that. And I even think that we actually might need new paradigms of looking at this. So to be specific, and I already mentioned it, the metaphor of modeling the players. Right now, we're trying to look at, this is happening, or this news is being made public, and therefore we expect this to happen. That would be the direct coupling. However, the same news can have a completely different impact on every single person that perceives it. And in fact, it does. It's just that you have like clusters of people that perceive it similarly, right? So what you would really, really like to find out is what clusters exist that are active in the market. And do these clusters exhibit consistent behaviors? And this is how you actually create these clusters. And once you can say something about the behavior of these clusters, so that's a much more complex analysis with a couple of steps of derivation in between, then you can start looking at the sum of that effect and start correlating that with the price of assets. And I think that would be the direction, and that really starts by understanding what is the frame that you're modeling, and then what are the qualities that you want to quantify, and what are the quantities that you're modeling, and so on.
Well, I think we got some work to do, boys. I think we'll have to have a 2-week session in Amsterdam here to work this out. Figure out where we're going with this. If this is an area that you're interested in, if you've done some work in sentiment analysis, if you'd like to know more about what Adrian's doing, what Bruno's doing, Bruno and I are reachable on LinkedIn. Adrian is XDMs. Is that the best place for you? Yes. Adrian, XDMs, Bruno and I on LinkedIn, but sentiment analysis is something that is going to be here before you know it. You could also just go to ChatGPT and put in when Lambo, and it'll tell you exactly when Bitcoin price will be going up. When my neighbors call and they say like, hey, what's going on with Bitcoin? I always send them a random story off the Onion. It's just so fun. It's because they look at it and they're like, what does this have to do with Bitcoin? I'm like, exactly. It doesn't. So, well, thank you very much, gentlemen. I think we could have gone for a couple hours on this, but we've just scratched the surface on this, and you two are clearly two of the biggest thinkers in this space, and we appreciate of having you on.
Thank you. It was my pleasure.
Thanks. And we will be back in just a couple minutes, back with Tim Kotzman and Evan Horowitz of Farmhouse.
Welcome to the Bitcoin Treasuries digital conference.
Transform the future of vulnerable communities. This is what Bitcoin philanthropy looks like. Soccer, technology, and Bitcoin. Join the mission. Help change the game at footballtech.org/Bitcoin.
Run your company at machine speed. Not using AI, you're already behind. Meet Orchestrator, built for Bitcoin native companies. Build, deploy agents, automate treasury and marketing. Close your books 5 times faster with zero spreadsheet drag. Cut manual work by 90% with 100% accuracy, with non-custodial automation, full audit trails, and human-in-the-loop approvals for every critical decision. To learn more, visit bitcoinorchestrator.com to schedule a personalized walkthrough with our team.
Debt is exploding. Bond yields are rising. Trust is eroding. But this isn't only about risks. A rare strategic opportunity is opening. Bitcoin is changing the game. And for the first time in decades, financial strategy is exciting again. MicroStrategy blazed the first trail, but each company's pathway is unique. While traditional consultants ignore Bitcoin's potential, Orange Wheel helps forward-thinking leaders see the opportunity and act on it. Orange Wheel, strategic guidance through the monetary transition.
Welcome back. And Evan's already here. Evan, how are you?
Doing great, Tim. How are you?
Good. Good to see you. I'm going to do an introduction of you, and I'm going to pretend that you're not here. Okay, you ready?
Sure.
Evan Horowitz is the founder behind Farmhouse, a new kind of Bitcoin treasury company built around a simple idea: protecting capital from debasement using Bitcoin and gold. He's focused on bringing a cleaner, more institutionally friendly approach to the treasury model. What did I miss?
That about does it. I mean, debasement is happening, and it's ramping up, and it seems mathematically pretty certain. Even in the models, when debasement slows down or there's any sort of balance sheet corrections, it just triggers more debasement later. So this is a long duration approach that we're taking here at Farmhouse, Tim.
Yeah, I guess, can we start at a little bit of a, stay at a high level? Why should people kind of care about what you guys are doing at Farmhouse, especially in a market that are, I don't know, like 100 treasury companies?
Yeah, I mean, it's interesting because is it a crowded market if you only have, a few dozen companies even exercising this opportunity so far? So I think we're still very early, and I think corporations will add Bitcoin to the balance sheet as a logical way to store value on their balance sheet and compound value on the balance sheet. And over time, as Bitcoin becomes more integrated into the plumbing of the financial system, which it's happening as we sit here today, that the nature of Bitcoin permeating through all parts of the financial community as a store of value, as the ledger, and all the other things that you can do with this layer, that the opportunity is still very early. And so we made our first Bitcoin allocation this week into our treasury to test our rails at BitGo. And so it's just the beginning for us. The sun is like just rising on this opportunity. And so it's an early stage opportunity. And Farmhouse, the public company, is it's well positioned to align our security with these two commodities. So on our balance sheet, it's predominantly Bitcoin, and there's some gold added to the equation as well. And compounding those assets over time on our balance sheet should create a flywheel. And so with such an early stage opportunity and such an early entry and such a humble beginning, there's really nowhere to go but up. Obviously, it's a forward-looking statement, and I can't guarantee what will happen next. However, the stars are aligned for us as far as clean balance sheet, early entry, no overhangs, a relatively good entry point to enter into the Bitcoin accumulation right now as well. I think we're closer to the bottom than we are to the top. And that being said, we're not trying to time the market. And part of being an anti-debasement strategy is that we're going to be deploying our US dollars into our scarce assets continuously.
Can you talk a little bit about combining Bitcoin and tokenized gold? Like what thinking behind the mix, what ratio of the mix, any chance that's going to change over time? Or I guess give me the thinking and the thesis behind that.
Sure. It's a unique strategy. I believe we're the first ones to implement the strategy for a digital asset treasury in the United States. There are two scarce assets. We're not mining asteroids. Elon hasn't mined any asteroids yet for gold. So, I love that argument. Like, oh, we're going to bring in an asteroid. Okay, let me know when. But for 5,000 years, gold has been a store of value. It's maybe not as portable as Bitcoin, but it's the predecessor to Bitcoin. Ultimately, Bitcoin to us is the end state. And it's this transition from gold to Bitcoin. Years ago, banks were able to include gold as a collateral asset, as a reserve asset. So it's truly a reserve bank grade, institutional grade collateral asset. Therefore, it has lower volatility because banks are accumulating it. Sovereign accumulators exist as well. And you can use the gold very easily as collateral to create more of a flywheel to accumulate Bitcoin. Like, for example, if there's a price dislocation, irrational pricing on Bitcoin, and gold is ripping, you can take a conservative position against your gold to accumulate more Bitcoin in that scenario. And so in our mix, it's a 70-30 balance. And, so we're 70% Bitcoin, 30% gold. We start off as tokenized gold because it's fast and easy. It's insured in our BitGo institutional grade enterprise account. And it's easy to leverage it on chain as well without counterparty risks, additional counterparty risks. So the 70-30 blend that's our commitment. We're not adding silver. We're not adding uranium, art, real estate. We are Bitcoin and gold. And people called Bitcoin digital gold. And so what if gold bugs will adopt our basket, our security with these two scarce commodities? What if gold bugs will adopt Bitcoin for the first time because it's blended? What if Bitcoin maxis will select our basket as a new position for their holdings because it's Bitcoin predominantly? You have the compounding benefit of Bitcoin over time, but you also have this ballast of gold. But there's no, for lack of a better word, shitcoins in the equation, right? So each PAX-G token, for example, is 1 troy ounce of gold. Each PAX-G token correlates to an actual serial number on a bar of gold that we can redeem at any point in time. It's audited, it's regulated, and our custody provider and our gold are both OCC bank charter pending right now. So there's this institutional element, this continuity, this succession plan, this nod to the thermodynamic energy of Bitcoin being stored forever. This nod to 5,000 years of gold being a store of value and it continuing forward. So we've constructed Farmhouse to be durable for those reasons, because the opportunity, it should outlive us. It should be something you pass down. And that's how we've, viewed this whole opportunity. So 70-30 blend with in-kind investment. So we have our seed round in progress today, and about half of the commitments so far are in kind. So that makes balancing the treasury an interesting task, but I welcome that task. Like, we went from planning a treasury last time I was with you here to being a treasury. I'm actually managing a treasury now. That's what it means to manage a treasury, and that's like a hell of a breakthrough for us, life-changing, and a real opportunity for Farmhouse shareholders. And so 70-30 blend, we will maybe lightly encumber 5 or 10% of our Bitcoin at some point in the future to experiment with different yield strategies, calls, puts, M&A strategies, where there's true alignment. And, so we will be opportunistic, but ultimately the flywheel is the compounding balance sheet machine that we've put together here from the ground up. And we recently added a native Bitcoin advisor named Dylan Healy. And so we're taking advice as well on how to improve our social and how to really utilize media and web presence and branding to really accompany this mission that we're on here to accumulate strategic Bitcoin and gold reserves on the balance sheet, compound those over time. And you have such an early entry point. Like, when you look at market caps or the valuation in our seed round, they're very early. And, so we're super enthusiastic about the opportunity. Institutional partners are helpful and easy to work with as well, I find. And BitGo is a breeze as far as setting things up. So this week, we actually tested all of our rails. We made an initial test Bitcoin acquisition. We have a PAX-G acquisition pending. We'll announce that as soon as it's complete. We set up the first bank bridge. We had the first successful funding to the BitGo account. And those are important milestones for testing our rails. And we've limited the attack vectors on this business plan in every which way that we can. And that means making sure that the float, the board, the number of common shares, the amount we're raising, that it's done in an incremental way so that there's no 51% attacks or board attacks. And so the Farmhouse Treasury, it's a wholly owned subsidiary of Farmhouse Inc., the public company. We're US based, we're US regulated, we have an uplisting plan. So from here, we would like to accumulate enough assets onto the balance sheet to qualify for filing our application to do an organic uplisting. We've been offered other vehicles that are already listed on NASDAQ as well that, could be, if they're strategic or well structured, could be a possibility to accelerate that process. But ultimately, we have this incremental approach where we do the seed round, then we do a more institutional size round to uplist, and then we expand from there. And with an eye towards digital credit, such as STRC. MicroStrategies laid the groundwork for a lot of this thinking. And the tokenized gold, and even custodying physical gold later, it adds a new element, a new wrinkle. And when you paper trade our strategy, it actually performed decently during the downturn. So, the gold could be a benefit for smoothing out the volatility. And, but ultimately the compounding effect of Bitcoin, it's still more than 2/3 of the overall treasury strategy. So, but that's how we're going to balance it. That's the plan. 70-30, stick 70-30. We'll probably go multi-institutional soon as the treasury expands. So, not all of our eggs are in one basket, but, think about it from a corporate perspective. Would you rather hold US dollars that are eroding over time? Or would you rather hold a basket that contains Bitcoin and gold?
I want to go back to what you mentioned about yield. Question. So I can only assume lots of people have the question, what does conservative yield look like? I mean, I've heard numbers floated out there of like high digits, low double digits. Like what's something that's conservative in your view, and with kind of like principal protection, the things where you can sit at night. Again, just back to the word conservative.
Yeah, so it's a great question. And, it starts with keeping your LTV, really modest so that if there's a big drawdown or flash crash or other, irrational disconnects, you're not at risk of any sort of margin call or other issue like that, or liquidation. That would be scary. So we've looked at call and put strategies where we would take like 5% of our collateral and start selling, doing puts and calls. And those can be anywhere from like 4 to 6%, but in like a monthly or less than quarterly basis. So the annualized rate of return is actually in the double digits. The risk factor there is that you may get your yield and sell your Bitcoin, and then there's a blow off top. So I believe there will be more blow off tops. I think that this 10-day period every so often where you have this incredible acceleration in Bitcoin, and you're starting to see it more with gold now too, since it's been tokenized. But I think that creates that volatility is an opportunity, and you can effectively place these call and put strategies to generate yield. There's other products coming onto the market that we're evaluating, and they'll need to meet certain criteria for us as far as like counterparty risk. We're not so keen on signing other smart contracts or putting our assets into other vehicles. Like we're anti-debasement. So part of being anti-debasement is we need our assets in hand. So new ways that come out, we'll be open-minded, looking for new opportunities to generate yield, but subject to our criteria. And so, another example could be holding STRC instead of USD. And STRC will pay out, a significant double-digit yield. So in that way, we can generate yield, but the focus is on duration. So I don't know if we lost him, but I'll keep going. Hey, Ed, how are you? You're muted.
Sorry. Yeah, Tim's been having trouble with that that hotel Wi-Fi all day. So I think, yeah, I just saw him drop there. We will.
I have an idea.
Go ahead.
I could shoot over to the deck real quick. I have my deck here. If you want, I'll share my screen. I'll run everybody through the deck, and we run through unless Tim is coming back.
Yeah, no, and I can't seem to get him off. 1 second. Let me see if I can hide him there. There we go. Yeah, why don't you can you share your screen? I think you're able to do that, and then we can flip through it real quick. I thought he was just intensely focused on your on what you were saying, but there we go.
Yeah, I mean, I love talking to Tim, and I miss him now.
Go ahead and maximize it, and you got about 3 minutes left. So
all right. Oh, by the way, I'll take you up with Adrian. You were talking about having a meetup in Amsterdam to talk about these things, and I'm happy to see you there, Ed.
Yeah.
So yeah. So look, we're in the seed round right now, and we're looking for strategic Web3 alignment. And so if you're an accredited investor and you want to talk about the seed round, I'd love to hear from you. Lean in after the show today. If you're not accredited or you want to dabble with our shares on the market, you can just buy them. They're FMHS. And so, we've talked a little bit about the problem today. Currency is expanding and we're accumulating scarce assets. Over time, people are seeing their dollars just going less and less far. And so Bitcoin and gold are the defense. We use tokenized gold and Bitcoin wrapped in our public equity, and that's what makes us a digital asset treasury. So I think everybody understands that part. We have a very clean company as far as it having no overhangs, unlocks, or other toxic issues with it. And so that's a great starting point. And we're already live. Like, the infrastructure is up, it's de-risked, it's set up, it's activated. We've got test buys in there. It's exciting. Good time to come in. And we are a first mover as far as having this hybrid model. We talked a little bit about it earlier, but it's a 70-30 balance. And we'll be rebalancing it over time as necessary. And so, yeah, we bought $15,000 approximately of Bitcoin just to test the rails, get everything going, make sure it works. And PAX-G is pending right now. We have $6,600 of PAX-G coming in. That'll be a little bit over an ounce of gold coming on. And that's the flywheel. Like, issue shares, accumulate assets, scarce assets, reprice the shares. Our market cap goes up. There's probably going to be some yield strategies enhancing and amplifying everything. And some good social media and stuff to start getting the word out there to invite more stakeholders to join us. I'm excited about that part. I would love to hear from you too. So yeah, in the seed round, we started off raising 2 million. We have 2.4 million of commits so far. We've started to realize a six-figure amount of that and are seeing more of it come in as we talk. It's very aligned capital. Behind the seed round, we'll be doing an institutional round. It's structured, for that plan, it's structured really intelligently, I think, as far as being something that will not blow up on us. We also have a $20 million equity line and a plan to do perpetual preferred. The seed round's at approximately a $9 million valuation. And it's a great opportunity with the early entry and the uplisting path. Debasement is just ramping up. Got an awesome team. It's a very aligned stakeholder-based team. And the opportunity is now. So if this is something that would interest you, reach out to us at treasury@farmhouse.tv, DM Evan Horowitz on X, or otherwise, let's get in touch. And that's the pitch.
Perfect. Awesome. Well, thank you very much for your time, Evan. And we will always be looking forward to companies like yours coming into the treasury space. I know that a year ago, we thought we were on this massive roller coaster that only go up, and now we're in this building phase of trying to find new ways to do things. So we're really happy to see what you're building.
Likewise, it's a pleasure to come on the Bitcoin Treasuries digital conference show, and to be able to lean into you guys and get advisory with you and Tim is it's very awesome for us. So thanks a lot for having me, and I'd love to hear from anybody. Lean in after the show here today if you'd like to talk.
Perfect. Okay. Well, with that, Tim did show up back in the studio. I was afraid there for a minute that New York City got wiped off the map somehow, but he's back. But this, thank you very much, Evan. We'll be in touch. Okay, for the next segment, I'm going to take over for Tim again for a short while, and then we're going to finish up today with a couple episodes. One with the Mara Quantum team. Borja is going to be here from Roxham to talk about the Bitcoin Treasury stock exchange, and then we're going to finish the day with Grain of Salt. But now I'm thrilled to bring on two of my very close friends and ex-coworker as well. We've got Mike Casey from Mara, Isabel Foxton Duke from Mara, who are on the Enduro team, a team that I used to be a part of when we were building out a world-class layer 2 side chain. And that product pivoted into the quantum world. Did we lose? We lost Isabel. She was there and then she's gone, or she's.
I think she'll be back.
She'll be back. She's got her phone. Mike, you're one of my close friends here in where I won't dox our location, but you've been in Bitcoin as long as I have. Tell me about your role at Mara and you know how that led to building Enduro as briefly as you can.
Right. Well, I'm Mike Casey, Director of Engineering at Mara, and in charge of the whole Enduro effort, which is our implementation interface arm for the Bitcoin protocol and issues for it. Now, Mara, of course, is the largest single miner. We own a massive amount of miners, and we actually run our own pool, Mara Pool. So we're like, I think, 5th or 6th largest pool right now. So that's Mara, and Mara, of course, has a keen interest in Bitcoin and a keen interest in the furtherment advancement and solving issues in Bitcoin. And one of the issues that we have tried to tackle is quantum. As I'm sure many of you have come aware recently, there's quite a number of potential threats to Bitcoin from quantum computing. And but the biggest thing to understand is it's not like if you use Bitcoin as a money, if you have Bitcoin, most people are not susceptible to the threat of being stolen should a quantum computer exist, right? But there are certain subsets of coins that are extremely vulnerable should it arise. Two biggest ones are the earliest coins, P2PK, and then reused addresses. So if, like, say you use a custodian and they say, oh, just send to this address over and over and over again. Well, anything that ends up in that address, if they sent from it, that is a used address. So that means the public key has been revealed on chain. And that means it is quantum vulnerable. So those are the two biggest things. And then also taproot addresses, which are the newest style of addresses. Those are all quantum vulnerable. Now, quantum computing isn't really a thing yet that anybody is aware. If it is, it's very closely held under wraps. But the entire industry is preparing. Banking is preparing. There are government guidelines. NIST put out some guidelines saying that I think by 2032, we have to be completely over to the new quantum resistant computing paradigms. So Bitcoin, in order to stay relevant and secure, it has to keep pace, right? We can't be the only thing that's not quantum resistant. So to wit, we have actually two initiatives that we run. Hey, Isabel's joined us.
Hello, sorry about that, guys.
And we work closely with Hunter Beast. And Hunter Beast, he started initially, it's become referred to again as Qubit is the idea, but the first part of Qubit is BIP360, which has been formalized in a proposal for a new output type. I'm sorry to nerd out on here, Ed, but the pay to Merkle root. And the cool thing about pay to Merkle root versus pay to Taproot is it does not expose that public key. The Merkle root structure is hashed, and because of that, it's natively quantum resistant, at least to long exposure attacks. So there's two. Long exposure attack is stuff that's just sitting there, like harvest now, decrypt later. So stuff that's sitting on the blockchain forever. That's a long exposure attack. A short exposure attack, that's an in-flight. So in other words, I do my Bitcoin transaction, and if you can manage to crack that in the time it takes for it to get mined, that's a short exposure attack. And we believe it will be much, much harder for quantum computers to crack short exposure than long exposure.
Okay, so let me take a step back here, Mike, because one of the things I love about your team, and unfortunately Hunter wasn't able to join us today, but for the benefit of our audience, which is a Bitcoin Treasuries audience, I'm going to have to probably do some interpretation here, which Isabel's good at. But the part I found fun about your team, and this was at the side event you guys did in Vegas last year, is that the three of you, between Mike and Isabel and Hunter, you don't necessarily agree on everything. And I think that's fantastic that you guys are all kind of thinking a different way on what is the quantum threat, what to do about it. And that, I think, makes a really good balance of having that team of three that can say, like, okay, well, let's approach this systematically. The other thing I love is that Mara is investing in this and saying that, hey, we can take a leadership position on this. So let's go step by step. And I think even on this first step, the two of you don't totally agree. Our audience is getting really tired of knowing whether the quantum threat is real or not. And my personal position on it is that there are a lot of other systems that will be hacked first, including traffic cameras in the case of trying to locate someone you want to drop a bomb on, or as one of my friends said, I'm going to hack Tinder before I hack anything else. It's like that would be the first thing. So, Bitcoin's so much further down the road on what would get hacked. So keep in mind the audience and talk about the quantum threat itself. Go ahead, Isabel.
Well, so I would potentially challenge sort of the idea that Bitcoin will be like way later on down the road in terms of things that could get hacked. And there's a couple of reasons why that I like to point out. Again, I am not an alarmist on quantum. I do think that we have quite a long ways away likely before quantum computers really actuate and are able to break the type of cryptography that Bitcoin uses to protect addresses. Hunter may disagree with me on that, so that's another example of something we might not all see eye to eye on. However, in land for a second, that quantum computers exist that can break Bitcoin's cryptography, which is elliptic curve cryptography, which you referenced, is used in a lot of things, right? It's used in various military contexts, various government contexts, traffic lights, et cetera, banking, et cetera, et cetera. The difference between Bitcoin and the threat to Bitcoin and the threat to all these other systems is all these other systems have centralized governance. Meaning, if Jamie Dimon decides tomorrow that he wants to upgrade and make sure that no elliptic curve cryptography is used by Chase Bank, he could issue it done pretty quickly, right? Like Chase Bank probably will be prepared for quantum. Bitcoin is a much more difficult because of the fact that we rely on decentralized governance. It's really difficult to make changes to Bitcoin. So, when people talk about like, oh, it's going to be good, all the governments are going to have issues first, the governments are probably going to get organized around this much more easier, like in a much easier way than we are, right? Like if you're, the president of the United States, you just have a top-down authority. We don't use ECC anymore, upgrade to all PQC cryptography, and that's the end of that. Whereas with Bitcoin, it's like we're talking about, potentially months to years of arguing over like which cryptographic scheme to use. And there's no centralized authority that just top down says, hey, fix this right now. And that's the challenge with Bitcoin. Like that is the fundamental, in my opinion, the reason why the quantum threat for Bitcoin is unique is because we have governance challenges, basically. There's so much beauty, so amazing.
So whether it's
but not easy.
Yeah. So whether it's 3 years away or 300 years away, you're more focused on the centralized, decentralized argument on ability to react. Mike, your opinion.
Yeah, well, I mean, it's important to understand our mantra with it because everything Isabel said is accurate, true, and correct, but we believe we as a community, Bitcoin should take a prepared, not scared approach. We need to do the planning now, regardless. It's on the horizon. It may never materialize, but it's a threat, and it's a real threat that is FUD. It's fear, uncertainty, doubt against Bitcoin as long as that threat exists, whether it's real or perceived, whether it's in a year or 100 years. The FUD factor is still there, right? So we're working on the solutions in order to be able to dispel the FUD. There's two types of FUDs. One is actually that the system is insecure and you can't use Bitcoin anymore. And that's addressed largely with BIP360 leading into Qubit, which is actual implementation of post-quantum cryptography on Bitcoin. And then the other is what to do about the existing coins that are just sitting there. And that's not, that's not your coins getting hacked and people stealing from you. But what that is it's an externality that you could FUD Bitcoin on from a price perspective. Because if you say, oh, somebody's going to steal the 1.7 million worth of Bitcoin, 1.7 million Bitcoin that are exposed now that are Satoshi's originally mined Satoshi era coins, not Satoshi himself, all of them. But of that era, that's a significant amount that could re-enter the market that was assumed dead. So that's the other thing, the other issue that we're trying to tackle. And the big thing to understand about that is there's generally two camps. One is the laissez-faire, hey, let's just let it happen. And those are commonly referred to as the liquidators. And then there are the people who say we can under no circumstances allow this to happen. Before that becomes a threat, we have to freeze or burn those coins and not allow them to ever move again. And those that side is typically referred to as the confiscationists. So we've been offering a third proposal. Not all of us agree on every element of this. We've clashed a lot internally on it. But the third proposal is a compromise proposal called Hourglass. And what Hourglass is instead of, we did the math. And, if left as is, if somebody had an advanced quantum computer, which doesn't exist yet, and had it advanced to such a degree that they could crack all of the private keys of those 1.7 million Bitcoin, and there is a lot of them, they could actually liquidate that within the span of 3 hours. If allowed
because of block size.
Yeah, well, yeah, the limitation is how many of those outputs can you cram into a block, and it's just spending those. So with the original Hourglass proposal, which was, these are 50 BTC lots, these single addresses. With the original Hourglass proposal, it would stretch that out from 3 hours out to 8 months. And we've since refined that proposal. So further limiting it, restricting it, not confiscating it, not burning it, but restricting the throughput of it. So think of grains of sand through the hourglass. That's where it gets its name. We would limit it in V2 down to a single Bitcoin per block allowed. And of the set right now, the 1.7 million Bitcoin, that would actually stretch it out over 32 years. So it's a very substantial. At that point, it kind of becomes a non-issue for those set of locked up coins. And then the only ones you have to worry about are the re-spent coins, which most of those people still have the keys for. And if you provide a BIP360 mechanism for them to move their coins to something that they can safely spend from in a quantum event, well, then that covers that use case as well. So again, our mantra, prepared, not scared, have the solutions in place to where if and when quantum does happen, it's already handled.
Yeah, this is such a complex topic because so if we say some nation state or some corporation is building this quantum computer that is going to be able to crack Bitcoin, and they're going to have it in 3 days or 300 years, is mostly irrelevant. Okay. Now, once they do have that, there are a set of coins that are more vulnerable than others, but with a powerful enough quantum computer, all coins are vulnerable. Am I correct there?
No, not all coins are
When
vulnerable.
spending, only when they're being spent.
Only
When they're being spent. Okay.
If you
Which
have a
makes your point,
supremely powerful, yes.
Yeah, but to your point, like you could make the argument that yes, that does fundamentally make all Bitcoin vulnerable in the sense that like in order to eventually turn your Bitcoin into purchasing power, you do have to spend it at some point. So yes.
Okay.
And
So
I'd like to interject too. We do run a product called Marathon Slipstream, which is a private mempool service, which you also, even in under this dire scenario, you could submit transactions to be processed. And since it's a private mempool, it doesn't actually leak your public key, which is the part that's quantum vulnerable, until that transaction is mined. So it makes it much safer for that. And we do offer that.
I can't try to simplify things without you guys complicating them. It's just amazing. But let me come back for a second. Okay, so taking the whole question of whether a quantum computer of this size is possible or not, the way to be best prepared for it is to put in it's not a protocol change, but it's a way of detecting it immediately and then slowing down the damage. Is that one way of putting it? Because if you were able to use Hourglass to say, okay, now we can only do one of these addresses per block, now the decentralized Bitcoin community is going to act like a centralized community and get off their asses and do something pretty damn fast. And the total damage could be days worth of damage or weeks worth of damage, but it's not going to be 3 hours and it's all gone worth of damage.
No, yeah, you wouldn't have this chaos collapse event if you put it in place. It would actually make them a lot less likely target, which means your initial attackers probably wouldn't attack that set because it's not nearly as profitable as other things you could attack. Yeah.
Okay. So back to the I'm gonna take a step back because once I started there, you guys already jumped ahead. But the people, is it Giacomo, or I'm trying to remember who it was that basically said that to build a quantum computer of it was Satoshi. Who's the guy that was on the documentary? Peter Todd. Peter Todd, who says that the cost of building this quantum computer is exponential with each qubit, and we shouldn't even be talking about this because it's literally impossible to build this kind of quantum computer. Do any of the three of you agree with that?
I can't say I would agree with that.
I was gonna say, I don't really love the term impossible. Like that feels like just appropriate term to use, like who the hell knows what's possible over time with, various like advancements. What I will say is like right now, he's, in my opinion, based on the conversations that I've had with lots of people about this, like he's correct that it would be very difficult to do it today. And it does become increasingly more expensive and like difficult to pull this off as you sort of pull these. But I also would say that, there has been some evidence of advancements such that these things are becoming less difficult to do over time, right? Like we're still far away, but there are advancements in things like putting together logical qubits such that the idea that it's impossible feels like not an appropriate it feels irresponsible to say something like that.
Okay, that's fair.
I agree. Yeah.
Yeah. So like the Wright brothers finished their first flight, and then you tell them, okay, now I need you to build a double-decker jet that can fly to Dubai with 380 passengers. They would probably say that's impossible.
The same with computers in the 1950s, where a single small amount of storage space took up an entire room. Yeah,
Okay.
I mean, you can't envision the future. We don't know for certain, and it's unfair to say that we do either way.
Okay, so that's a fair argument. So if it is possible, we then know mathematically that there are vulnerabilities, and then the best way to what do you call it? Prepare, not. I'm sorry.
Be prepared, not scared.
Prepared, not scared, is to put. So this is not BIP 360. Hourglass is, what is Hourglass? It's
no. BIP 360 and Hourglass is it's all prepared, not scared, right?
Yeah, but
It's all
is BIP 360 and Hourglass the same thing? No.
No, they're two completely different proposals. So yeah, BIP 360 is a new way to spend Bitcoin that is quantum resistant. So you can actually use new algorithms to spend Bitcoin. That is, in a quantum resistant manner, where you have no fear of a quantum computer destroying any more fear than you would have a traditional Bitcoin transaction today, right? At least.
Right. And I would say,
and then what's Hourglass?
BIP360 itself, I would say technically BIP360 itself doesn't even do that. BIP360
It's a
is
bridge
a groundwork
to that
proposal.
Yeah,
it's a groundwork proposal that future BIPs we will will include post quantum algorithms that could
right. There's much work to be done. Yeah.
But the idea
So
was,
then what is Hourglass? Is that's not a protocol change?
No, Hourglass is a soft fork proposal, but it specifically deals with the Satoshi era coins because they were mined under a different output type. So they were mined where it reveals the public key on the blockchain. So they're sending it not to a hash of the public key. So when you're protected by this hash, you're considered quantum resistant, but they're not protected by that hash. So these 1.7 million Bitcoin that were originally mined during the Satoshi era are in fact quantum vulnerable should a sufficiently advanced computer arise. And Hourglass doesn't throw them away, doesn't burn them, doesn't freeze them. It just makes them really slow to get at. Yeah.
If you think, Ed, there's two real problems that quantum computers could potentially create for Bitcoin. One is, can a quantum computer come into your wallet and take your Bitcoin, right? That's probably the first thing that people think. Right now, there's already ways that you can kind of use proper wallet hygiene and do things with the way that you hold your Bitcoin to prevent against quantum theft of your coins today. The other problem, though, is that there are a bunch of coins that are just sitting in quantum vulnerable addresses. For instance, all of Satoshi's coins are sitting in quantum vulnerable addresses. Unless he moves them, that's at least 1 million coins that could theoretically be ripped by a quantum computer and dumped on the market. And now it's 4 particular coins are safe in your wallet because the market's dumping and your Bitcoin's not worth anything. So there's two issues. There's the is my personal Bitcoin safe? And then is enough of the whole supply of Bitcoin safe such that we won't have a giant market dump that could potentially, destroy the value of the network.
And what are those two camps called, Mike?
The liquidators they basically, we've seen Bitcoin drop 95% before. It'd be fine if that happens again. It's not going anywhere. That's basically
this is where we disagree. Yeah. This is where Mike and I disagree.
And then, that's the philosophy of the liquidator camp is usually they're more hardcore Bitcoiners, not your keys, not your coins, all of that. And no, we do not touch it. We will not censor anybody ever. And then the confiscators take the opposite view and they say, well, this is extremely harmful, right? So harmful, it must be prevented at all costs. So it doesn't matter what Satoshi did and how many coins he mined. Even if he still has access to them, we are getting rid of them and taking them off the table. And that's the other side, the confiscator side. Hourglass sits in the middle.
So basically the question is, if you're just talking about the prospective market impacts of a potential quantum event, right? There's different ways, there's different camps of how we should be addressing the market impacts of quantum vulnerable coins. So for example, Satoshi's million coins. Should we burn them so that they can't be put on the market by quantum computers? If quantum computers come and take Satoshi's coins, we just burn the coins so we don't have to worry about that? Or take Satoshi and potentially dump them on. And that's, kind of the fundamental sort of question that's being asked. Hourglass, which is a proposal by Mike and Hunter, offers sort of a third solution, which is essentially slowing the ability to spend Satoshi over time, which a violent market event in the event that quantum computers were able to access those coins. But you also could theoretically, be able to slowly move those coins or get those coins out of those wallets if for some reason, Satoshi wanted to come back and claim them.
Cool. Yep. What does this mean, or why is this important to Mara? How is Mara monetizing this effort, and what help do you need from the community to make this seem important enough?
First, Mara is the second largest treasury holding entity as far as a publicly traded company in Bitcoin, still behind, of course, MicroStrategy by a fair margin, but still. we hold a lot of Bitcoin and are very well invested in our Bitcoin treasury. So for us, it is extremely important that we tackle Bitcoin related issues, and as a Bitcoin miner. And I'll let you speak to the second part, Isabel.
Oh, I mean, in terms of why Mara cares about
Yeah,
this?
well, like, what's Mara's interest here? Yeah.
I mean, yeah, I think broadly speaking, like Mara has like a vested interest in making sure that the network remains in good health. As you know, let's call it the second largest Bitcoin miner in the world, and as Mike said, the second largest holder of Bitcoin in the world. I don't think there's really much beyond that. Most of our efforts around quantum, we are operating with in sort of a nonprofit R&D motive at this stage, because we want to make sure that the health of the network is maintained, and that is a number one priority for the business. So yeah, I think it's really as simple as that.
Selfish altruism. Yeah.
Yeah, selfish altruism.
Self-interested altruism. Yes.
Yeah. Well, we've got our next guest. I'm going to bring him on stage here because he's a Bitcoin OG in Argentina. But let's I don't know if you know Borja or not, but Borja is joining us from Roxum in Argentina. Borja, are you a liquidator or a confiscator?
How are you, Ed? How are you, Isa? And how are you, Mike?
Hello.
Thank you for having me here. Definitely not a confiscator. And definitely, I hope that not to be a liquidator. Neither.
They're both pretty bad.
Why we're pushing the middle.
They're both bad. It's a tough problem, like it's gonna get real. In this, if quantum becomes, if the advancements in quantum become more pressing, and kind of things are getting really real, we're gonna have to make really hard choices as a community. And there's going to have to make difficult decisions, and there are going to be trade-offs one way or another. So there's no easy solution to this. And thankfully, we believe at the moment we have some time to figure it out, because it will not be a small problem to solve if it does get.
For those people that are worried about this or just want to learn more about it, is this on the Anduro website, or where can they learn more about just everything you guys are doing?
We recommend BIP360.org. Yep.
Yeah.
So we're really focused on
BIP360.org.
the BIP. Yeah, we're really focused on BIP writing right now. We're really focused on, supporting Bitcoin governance structure. I mean, at the end of the day, and like you said, like a norm, we sort of transition. At a certain point, I think it really became clear to us that the number one priority has to be protecting layer one. And so, yeah, we've really been focusing most of our efforts, particularly on writing quantum mitigation proposals for Bitcoin Core.
And
Fantastic.
working toward real implementations, actual practical solutions.
This is heavy stuff, man. Every time I listen into one of these quantum debates,
right.
I get about 10% of it. And then every time 10% more, it eventually adds up. Well, Isabel, Mike,
Thank you very much for having us, Ed.
Yeah, thanks for joining. The Bitcoin Treasury space tries to stay focused on what it is, but the quantum argument always comes up, and Saylor's kind of given his statement on it. But the work you guys are doing is clearly important, and we appreciate it. Thank you very much, Mike. Thanks, Isabel.
Thank you, guys. All right, bye.
Borja, ¿cómo estás?
All is good. Life is good. Ed, what about you? How's everything? How was the day?
Good. Except that I lost him. The hotel where he was doing the conference from, they've lost their internet completely. He was having trouble with his video during the morning, and so he's scrambling to get all his gear together and get somewhere new. But that's okay, because you and I have talked about this for a while, and so I think this will be a good opportunity for you and I to walk through what you're doing at Roxum. There's been some announcements lately, and an email that came across telling us how you've got cost of capital at the 4 or 5% level, and then the more you told me about the roadmap, I was just blown away with what you guys have been building, somewhat in secret down there. So why don't you tell our audience first that I don't think many of our audience is going to know who you are, unfortunately. Tell us about your background in Bitcoin briefly, and then why you decided to take the move with Roxum to build out what you're building.
Yeah, of course. So first off, once again, thanks for having me here. It's a pleasure to be around. I'm Borja. I'm 29 years old. I've been in Bitcoin for a very, very long time, since 2011. Um, eh, when I got in at age 14, I didn't come in because I thought that the vision was awesome or that because of anything. I actually, all my savings were $20, sorry, $80, and Bitcoin was $20 at the time of writing. At that time, sorry, and I was just shocked that I could actually like kind of print mine $20, a quarter of my savings every month, because back then you could mine 1 Bitcoin per month, and that's how I started basically. Then years came by, I continued mining for a few years, then Bitcoin grew and grew and grew. And when I was 20, Bitcoin had changed my life. Basically, I was 20 in 2017, so in that bull cycle. And in that moment, I decided that I had to put my life on this, because I thought that in the same way that it had changed my life, it could change the life of many others in Argentina. And Argentina, as you know, is a very distressed country with plenty of economic problems and financial problems and so on. And I thought that Bitcoin could be great to the country. So I started something that ended up being Lemon, one of the largest Bitcoin and crypto fintech companies in Argentina and in Latin America. Today, it has like around 6 million users. We raised 50 million up to the time I exited. Right now, the total funding of the company is around $70 million. We had amazing investors such as Tim Draper, Goodwater Capital, Coinbase, and many, many others. It was a huge success. We gave Bitcoin to millions of people in South America through the Bitcoin cashback in our card. We had our flagship product was a debit card that you could use with any stablecoin or crypto, and it would give you a Bitcoin cashback. And then I took a sabbatic. I sold the company. I took a sabbatic, and once I got bored, I started with Roxxon, and basically I would divide my life into two stages. Stage one was a Lemon, in which we worked on Bitcoin accessibility, and stage two is Roxxon, in which we're working on unleashing the Bitcoin economy.
Beautiful. And the latest product to come out of Roxxon is let me see if I get this right, the Bitcoin Treasury Stock Exchange.
Yeah, that's correct. So basically,
And feel free to share your screen at any point if you want, if you need to show it to us.
yeah. So basically, our vision is that the next strong and big capital market is going to be the Bitcoin markets. And the historical thesis we do is very simple. It's like the first great stock market was the Amsterdam Exchange and the Guilder. Then you had the London Stock Exchange and the pound, and then Wall Street and the dollar. We believe that it's Bitcoin markets. It's obvious that Wall Street has already reached its peak. Many people in the financial world wonder where the next big market is going to be. Is it going to be Hong Kong? Is it going to be Shanghai? Is it going to be London? History tells you that if you want to answer that question, you should guess what the next strong currency is. And we just believe that the next strong currency is Bitcoin. Ergo, the next strong capital market is going to be Bitcoin. So how does that look into a product? Well, you're building basically an exchange, because you have stocks, you have commodities, you have bonds, you have ETFs, you have crypto, and so on, where in the same way that in the London Stock Exchange, everything is priced in pounds, or on the Wall Street, everything is priced in dollars. In Roxxon, everything is priced in Bitcoin, and that's Bitcoin capital markets, right? So today, our product, we have different Bitcoin futures. We have gold Bitcoin, SP500 Bitcoin, dollar Bitcoin, oil Bitcoin. And then we have the spot markets, which we launched with a Bitcoin Treasury stock exchange, basically, with a Bitcoin stock exchange, where we listed practically all of the US Bitcoin Treasury companies. And now we are in the way of listing the rest of the international Bitcoin Treasury companies. We're in our way of listing the European Treasury companies, the London Treasury companies, Metaplanet from Japan, and the Hong Kong Treasury companies. So this is hopefully coming very soon. And lately we've been very involved with the whole treasury space as a whole. Last week we launched Stretch as the flagship product as well of what we call Bitcoin. We're building an entire vertical, which is the Bitcoin income vertical, which is essentially how to build a income, Bitcoin income, right? And today, like everything we do, all the stocks that customers have in Roxxam, they pay and that pay dividends. The dividends in Roxxam are distributed in Bitcoin. So what happens is that last week when we listed Stretch, we essentially enabled and unlocked the opportunity for people across the world to hold Stretch and make Bitcoin every month. And last week we did a triple announcement. We announced the listing of Stretch and this Bitcoin income concept of just receiving Bitcoin dividends every month. We're working on listing SATA, which pays at the midterm of the month. So essentially, you can get a bi-weekly Bitcoin paycheck, or you can get bi-weekly Bitcoin dividends, right? So you have a portfolio that pays you Bitcoin every 15 days. And most importantly, which is related to something you asked, we announced Roxxam Carry, which is a product that we're launching in the next few days. By the way, we're enabling stablecoin purchases of Stretch in the next few days. And after the stablecoin purchases, we're going to be launching Roxxam Carry, which essentially we are very proud to say that we are inventing and creating and unlocking a whole sector, a whole industry, a whole vertical within Bitcoin, which is the Bitcoin fixed income vertical. And the launch of Bitcoin fixed income, the birth of Bitcoin fixed income is basically powered by or based on this carry trade opportunity and Stretch, which essentially is this opportunity of borrowing cheap dollars against your Bitcoin collateral, and with those dollars buying Stretch. And the result of that transaction, of that carry trade, is a net Bitcoin yield, right? Which is the first time in Bitcoin's history in which you can get an actually transparent Bitcoin yield, because every Bitcoin yield and Bitcoin financial product that we've seen until today has been in the form of a black box. Every exchange has a Bitcoin earn program. Every platform has a Bitcoin earn program. But if you want to see what's going on in the backend, all you will see is like macro stuff. Like, yeah, we do basis trades or arbitrage or statistical arbitrage and so on. But you will never really understand what's exactly happening. And for the first time in Bitcoin's history, now you have a way of creating Bitcoin fixed income in the form of a carry trade, where the whole trade is completely transparent and you could do it yourself. And this is what I love the most, because this is not a magic solution that we're doing in Roxxam. This is not that we are giving you a special Roxxam potion or an antidote or whatever. This is something that anybody could do in their homes, and anybody could just borrow against their Bitcoin dollars at cheap rates and go to any broker. It could be us or not, and just buy Stretch and keep the difference. All we're doing in Roxxam is just making it very efficient, very nice, and with a very powerful experience, and in a very simple mode. And then, of course, I was talking about this today. Then, of course, that scale will give us some benefits, like even lower rates, and being like allowing us to be like wholesalers of the whole thing. But this is the power that this whole concept of Bitcoin fixed income has, which is this is something that anybody could do. We're just facilitating it. We're just making it easy. But this is something that, again, anybody could do. So we're very happy and very excited about this launch, and we believe that this is the birth and the first step of an entire industry that will emerge within Bitcoin. And to be completely frank with you, nothing of this would have been possible without what Sailor is doing. So I think that the strategy is not only unlocking and clearing the way for Bitcoin powered digital credit and all of what he's working on that he continuously talks about, but he's actually powering the next phase of Bitcoin, which is like the birth of, again, Bitcoin fixed income in a transparent way. So I think that this is something very major and a huge milestone for Bitcoin and the industry in general.
Yeah. So for a toxic Bitcoin maxi, this doesn't work, right? This is not a hold your Bitcoin and put it in cold storage. This is a way to actually start using Bitcoin. Having a Bitcoin denominated exchange, understood. For a US based person, or even London based or French based, they're kind of probably going, well, why do I need this? But if we were to pick a country, I don't know, Argentina, for example, you don't have access to MSTR. You don't have access to Stretch, right? Or I mean, there are some countries where those are offered on OTC markets or something like that. But for example, someone in Argentina that has Bitcoin can then deposit their Bitcoin at Roxham and purchase tokenized shares of MSTR, tokenized shares of Stretch, tokenized shares of all these different US equities, maybe even foreign equities that are Bitcoin denominated on a new global exchange. Explain to us the process, because I struggle with this as well, of tokenizing a share of MSTR. How does that work on the back end? That I'm in Argentina, I'm depositing Bitcoin, I'm buying a tokenized share of MSTR. How does that work? And I know there's a couple companies that do it, but explain to us how that works, because that's the part that I think gives people the most anxiety.
Yeah. So I will answer the question, and I will also give a comment on what you said before, which is very important. As you said, any toxic or any hardcore Bitcoiner, it doesn't matter if he's from the US or whatever country, there is one thing that a Bitcoiner wants all the time, and that is more Bitcoin, right? And this is essentially the way to get more Bitcoin. And this is a beautiful part about it. First off, with the whole Bitcoin fixed income thing that we are bringing to the market and creating, this is essentially a way to get more Bitcoin with your Bitcoin. So let's put it this way. Like, you're doing the carry trade, you're borrowing dollars against your Bitcoin, right? You're buying SATA, you're buying Stretch, and every 15 days, you're getting your Bitcoin that you still have exposure to because it's the collateral that you have used to get the loan, to create the carry trade, is giving you Bitcoin every 15 days. So first off, this is a Bitcoiner's dream come true. Like, I still have my exposure to Bitcoin, and now I'm getting more Bitcoin with the Bitcoin I already own, right? So this number one is great. And regarding the other part, which is the why do I need access to MSTR or all of this in Bitcoin and so on, that's very key and very important. And I just want to put a comment there, which is the following. Because what a Bitcoiner wants is more Bitcoin, it's very important that if you as a Bitcoiner have exposure to other assets, right, it's very important how you track the performance of the assets. So let's say that I have 10 Bitcoin and I have another 10 worth of Bitcoin in stocks. Like I have a stock portfolio that is worth 10 BTC, right? So let's say that Bitcoin was 100K. Let's say I have $1 million in Bitcoin and $1 million in different assets. If you're tracking the performance of those assets in dollars, right, you could be making terrible investments. Let's say that you had those $1 million in the SP 500. In the long term, the SP 500 in Bitcoin terms, priced in Bitcoin, is a terrible investment. Like, you lose an average of like 10 to 20 to 30% a year if you have your Bitcoin invested in the SP 500. So if you're a Bitcoiner and you have a varied portfolio and you have exposure to assets that are not only Bitcoin, then it's very important that you track your investments in Bitcoin terms. And that is exactly what Roxham is about. Roxham is a platform where, because everything is priced in Bitcoin, it's the only good place you have to actually make sure that to actually have your portfolio there and track the total and overall performance of all your investments in Bitcoin terms. And whenever you want to sell, you go back to your hard currency. And this is important because this is exactly the same as what happened in Argentina. In Argentina, everybody used to save, think, and live in Argentine pesos. And today, people only transact in Argentine pesos, but save and think in dollars, right? So it's exactly the same thing. Like, an Argentine doesn't know how much Apple stock is in pesos. They know how much Apple stock is in dollars, right? So we see the same process happening with Bitcoin. People will continue to live and spend dollars, euros, and local currencies. But they should track wealth. They should track portfolios. They should think about P&L in Bitcoin terms. At the end of the day, essentially, the TLDR is, if you have any other asset which is not Bitcoin, you will make sure that it's a good investment if your portfolio is worth more and more Bitcoin a long time. And you will know that it's a not good investment, it's a bad investment if that portfolio is worth less and less Bitcoin as time comes by.
Let me put that into some other terms for a second so people can get their head around that. If you've got Apple stock at whatever it's at, $300, and Apple stock goes up to $330, you think you've made 10%. But if you've got Apple stock denominated in Bitcoin, and Bitcoin outperforms Apple stock, the value of your Apple stock denominated in Bitcoin, you actually now have less Bitcoin. There you go.
That's exactly it.
Yeah. And this is what I tell people all the time when they tell me, when's Bitcoin going up? I'm like, no, it's when's the dollar going down? Stop asking about Bitcoin going up. I have a friend that calls me all the time. He's like, hey, your Bitcoin's not doing that good. And I look at it and I'm like, nope, I still have the same amount I have yesterday. What are you talking about? So it's that concept of getting out of the dollar mindset and into that Bitcoin mindset, which your product is doing. I asked you another question there, which you didn't address, but explain to us the mechanics of tokenizing a stock and how does that work? Because if I was to deposit my Bitcoin on your site and you say, okay, you now have 20 shares of strategy, I don't know what that means. Are you just promising to me that maybe you have them?
Perfect question. So regarding what you just said about Apple, that's exactly it, Ed. And thank you for putting it in those words. And I hope that everybody can think about their investments in Bitcoin as they hear this. And going into tokenization, actually, it's very simple. So the way that tokenization works is going to be the following. And it works in the same way for all issuers, right? What will happen in the back end is, let's say you go to Roxxon and you buy, like, let's say, 1 Bitcoin worth of Stretch. And let's say that Stretch was, Stretch is $100, right? So let's say that you buy 1,000 Stretch. So what will happen in the back end is the exchange will receive the money, right? And it depends on the flow. The exchange could be the issuer, or the exchange could work with an issuer like Ondo, Dinari, Xtalks. There's plenty of them today. And once the issuer receives the funds, right, they will post an order onto the exchange or onto a broker, a dealer partner. Most of the industry issuers today use Alpaca, which is a very well-known fintech broker dealer that provides broker dealer APIs and so on. And essentially your liquidity is going to the New York Stock Exchange or the Nasdaq, right? Those shares are being bought, and once they are in the inventory of the issuer, they issue a token. So it works exactly in the same way as a stablecoin, right? So again, the process is you send a buy order, the exchange sends the buy order onto the broker partner or the issuer. It depends if you're a direct issuer or not. This order goes to the New York Stock Exchange, the Nasdaq, the whatever. And once the order is filled, the token is issued and it's credited to the user. So it's actually quite simple. What each user has is, again, the token representation of that share that is under the custody of the DTCC in the case of the US, and of the broker partner or the issuer. And in most of the issuers today, you have Dinari, you have Xtalks, you have, Ondo. You get all the same rights, including dividends. But the only thing that, and we have to be fair, the only thing that today all of the tokenized stocks do not support is the voting rights. So essentially, you get all the benefits. The only thing you don't get is any voting rights. You don't get to vote on any of on the shareholder meetings and so on. But other than that, it's just that it's the same as a stablecoin, in the way that when you send dollars to Tether or to a Circle, they just get those dollars and issue a token of the stablecoin. In this case, it's the same. You just route orders to the issuers that get filled, and once those orders are filled and the shares are bought, are purchased, they just issue the token of whatever stock it is that you bought, and that's what you get as credited in your account. So it's
So
actually quite simple.
there's counterparty risk, but it's the same counterparty risk that you have with stablecoins, right? Which nobody seems to have a huge
Yeah.
problem with.
Exactly. It's exactly the same thing. And it's exactly the same counterparty risk as if you had your, let's say that you have, well, I'm going to correct myself because if you have an account with any broker dealer, you still have the counterparty risk, right? With a thing that traditional broker dealers, they have an insurance. So I think that in the US, it's SIPC, it's up to $500,000. But if you have anything above $500,000, well, then it's exactly the same thing, right? So you do have that risk, and it's uninsured. But I would say it's the same. It's just that in TradFi, you have a $500,000 insurance. But as you just said, it's exactly the same thing as a stable coin, but for stocks. It's quite simple, actually.
So what jurisdictions what's the website for is it just Roxum.com or Roxum.com? And that's where you can, okay, so it's not available for US citizens. Which jurisdictions are you available in, and when will you be available in others?
Practically all over the world, except forbidden jurisdictions, and the US, forbidden jurisdictions like Iran, Afghanistan, and so on, and the US. And we're working to be available in the US soon. So we're excited about that as well.
And what's on the roadmap? What are you going to do after the carry trade?
So right now, it's actually a very interesting roadmap, and we're very excited about it. Again, in the next few days, we'll be enabling deposits, withdrawals, and purchases with stablecoins. We're also going to be listing some top cryptocurrencies like Solana, ETH, and some others. And we're going to be listing SATA so that you can get the bi-weekly Bitcoin dividends. We're going to be launching after that the Bitcoin carry trade, Roxum Carry. Which is going to, again, essentially be the birth of Bitcoin fixed income. Then we're working on integrating, as I told you before, European exchanges, Asian exchanges, and South American stock exchanges, so that we're basically working on the evolution of the carry trade, because the concept of carry trade with stretch is something that today gets everybody really, really excited. But the truth, Ed, is that you could do the carry trade with anything, as long as, so essentially you're borrowing capital and putting that capital to work at a higher rate. So essentially, let's say that the interest rate was anywhere from 3, 4 to 7%. As long as you get something that yields above that, you're essentially doing a carry trade. So what's very interesting is that we're going to be working on the carry trade vertical as a whole. And the vision we have for that product is for Bitcoin investors to be able to create their own carry trade with instruments from all across the world. So Stretch and SATA are preferred stocks of two companies. But the carry trade is something that anybody could do with any corporate bond or sovereign bonds or like preferred stocks and shares from around the world. So essentially, the product that we're building will allow Bitcoin investors to do the carry trade with all sorts of instruments from across the world. So to put it in concrete examples, if you want to do the carry trade with Argentine bonds or corporate bonds from Petrobras, which is the largest oil company in South America that pays 15% a year, or if you want to do the carry trade with any corporate bond from the UK that pays, I don't know, 8% in pounds, and so on. So it's very interesting that users will be able to basically do carry trades and create fixed income instruments with assets from all over the world, from exchanges from all over the world. Bitcoin-backed loans, everything, all of this is essentially powered by Bitcoin-backed loans. So yeah, it's an intense roadmap. There's plenty of things going on and happening, and yeah, we're super excited.
Yeah, and so this is the website. You go to Roxum.com, you go to the terminal, and you're able to to basically trade these shares in Bitcoin denominated terms. Some of them are available, some aren't yet, but you're working fast and furious to get the platform available not only worldwide, but for more and more assets. I'm going to blindside our next guest here, Mr. Mike Grain of Salt, who I think the two of you have had a conversation, and Tim has found internet, and,
Vamos, Tim.
no more blurry Tim.
We're back. We're back and we're clear.
We're so back.
We're so back. It's so over, but now we're so back.
So
How you doing, Mike?
Mike can't hear us, and you're muted, Mike. There, you're unmuted. Let's see.
It's so over again.
Yeah, well, Mike's figuring out his audio. No, that's very exciting. And also another one of your properties, Borja, is Roxham.tv, which is a dedicated, I'm not going to say, it's not Bitcoin only, is it? It's
so Roxham TV. Roxham TV is world news through a Bitcoin lens. So we cover anything important happening across the world, geopolitics, politics, economics, finance, war, Bitcoin. We'll just cover everything from a Bitcoin perspective, which is from a freedom perspective, from a Bitcoin perspective, and so on. And we have a studio in San Fran, London, and Hong Kong, and we just try to inform Bitcoiners as much as possible on what's happening around the world, so that they can make the best shots and just keep informed.
Do we have you now, Mike? Nope. Still, we can't hear you. You can hear us now. We can't hear you. Muted.
We have video.
We have video. He can hear us.
We're halfway there.
Can you hear me now?
Yay!
There we go. We're so back.
We're so back.
This is the crazy part. I heard you fine before, and then as soon as you put me on air,
when you come on stage, now there's been issues all over the world. We've had 2 of our guests had to cancel because they have no internet at home. Something's going on. Something's going on with the internet. But Mike, I know you and Borja had a conversation. What question could you ask Borja for our audience? What did you think of his product and what he's building?
You know, I think this is awesome because now you have to think about how do you buy something priced in Bitcoin? That's the native part that they do, and they tokenize the stocks themselves. And I think that's something that people need. That's where it's going to. What he's doing is right. It's just early, and that's something that it's hard to think about. That something priced in Bitcoin, and that takes into account because the dollars are inflated every year, both through monetary debasement and through inflation. And what he was talking about with Argentina is true. So I think it's just a matter of adoption time frame. So I like what they're doing, and it's just another way to look at it. I mean, I think it's great.
Yeah. No, I just think of someone in Argentina, for example, is sitting on Bitcoin, is saying like, man, all these people running away with the strategy and stretch and all this. How do I get access to it? And boom, there you go. You don't have to deposit your money into an Argentinian bank and hope that they've got SDR shares and no, denominated in Bitcoin. Like the way we've been thinking for years is just like, how much Bitcoin do I have and how do I get more Bitcoin?
Right. It's more of a native platform, and I think that's why it's pretty awesome.
Yeah. So you need users, right, Borja? So they go to roxham.com, they can sign up, and you get more users on board and more volume, and your platform takes off.
That's it. And luckily, from last week, also with the stretch thing and so on, it's been incredible. We've been getting customers from all over the world, and we have a big waiting list of people waiting for the carry trade product. So it's officially taking off. So and we're very happy that that's the case.
Very good. Before I let you go, I'm going to do some trash talking. I know you have plans to come up here for the World Cup. Don't be prepared. Argentina is going to be out of the first round. They're going to lose all 3 matches.
I think we're going to win.
I lived in Mexico for 13 years and have this distaste for Argentina because they would always beat us.
Yeah, it's terrible. And we always get Mexico and we always beat them.
Always beat them. And see, if it's offsides or a handball, it just doesn't matter. You guys find a way to win, right? So we look forward to seeing you up here in the States and seeing great success for Roxham. But thank you very much for joining us. Keep us updated.
Thank you, guys. Thank you for the invite, and we'll do so. We'll keep you updated. Thank you for everything.
Muy bien. Hasta luego.
Bye-bye.
All right. So we've got Tim with Wi-Fi. We got Salt with audio. What a day.
And now
You
you're
guys-
the one that's a little bit blurry. I mean, what is going on?
Me?
Yeah.
You just all of a sudden went blurry.
I don't know. It could be the internet here. I've got a. I don't want to show you the wall, but I just got a background. I guess I could turn it off. But anyways, well, we wanted to finish today's digital conference with Mr. Grain of Salt, Mike, to talk about what Mike thinks is the future of treasuries here. When Tim and I met, when I was at Strategy, and Strategy was at $400-500 a share, and he did this million view interview with Fong, and then the Strategy World in Orlando with 400 people in the room with True North. It was just euphoria, right? It's not so much euphoria anymore. It's kind of taken a little bit of a hit here, and the treasury companies that are still out there are still fighting and struggling to find a business model. Strategies just keeps booking along, but not to be too concerned about their stock price. More about just accumulating Bitcoin. I could go on, but Mike, what do you think? What's the future of treasuries? You wrote a book on it. Where are we going from here?
You literally wrote the book on it.
I wrote a book on it, and I'll give everybody the quick summary. Look, the name of the book is The Rise, the Fall, and Reemergence of Bitcoin Treasury Companies. I have a solid belief that if Bitcoin is good for a person, it's good for a company, and it's good for a sovereign nation. And what I've been talking about specifically for the past 2 weeks, and really I've been energized because of STRC, has this feedback loop that once it gets and maintains its par value, which is $100, and it's been doing phenomenally well with that, it's able to buy a lot of Bitcoin. And what we've seen is, from my view, is I think that for the other Bitcoin treasury companies, Strategy made it look very easy. They'll be in this for 6 years. In August, they were first to market, and they won in size. And the reason why they're better at it is because they pretty much tried everything first. They bought Bitcoin, they did the converts, then they did the prefs, and they didn't just do one pref, they've done 5 prefs to try and figure out what's the best mix of them. So if somebody's like, well, they should figure out in one shot and one try, it's impossible. And they've changed over time. So I'm uber bullish. And what the data is telling us, and we're now seeing this specifically with Strive, with SATA getting close to its par value, they bought more Bitcoin. We're seeing the same thing even with Metaplanet, that they're able to access the capital markets. But very specifically, Strive has got a SATA product, which is very similar to STRC. And for Strategy, it's the second best quarter ever for them buying Bitcoin. They're at 88,568 Bitcoin for this quarter. And in case people don't know, we're in a bear market. And all I had to listen to for the past 2 years is, oh, Strategy is going to get liquidated in a bear market. Now we're in a bear market, and it's the second best quarter ever. And I think they're going to break 100,000. They only need 11,500 Bitcoin. It's like only 11,500 Bitcoins
in 12 days.
In 12 days, do I think they do it? Yeah.
Oh yeah.
I think they get 100,000, and that'll be only the second time they got they'll have 100,000 Bitcoins in a quarter. And the narrative is going to switch very quickly. The narrative is going to be this: as they get closer, once they get to 800,000 Bitcoins, which is, let's say, a month, there's going to be a countdown timer for when do they get to 1 million. And every week it's going to be, can you guess the date when they hit 1 million Bitcoins? And Bitcoin is, I talked about the metrics, which I just gave you, how many they've been able to acquire based upon the historicals. And I think people are going to look at this and say, wow, the narrative has shifted, and it's going to catch people off guard again. And Bitcoin's going to run up to 80, 90,000. People will be like, oh, is this a fake out? And I think it's going to continue to run. And I think that that's where this is going to go. I mean, I'm way more bullish on this because of the metrics. Do I like the Strategy stock price? No, go ahead.
There's no math involved in this, but actually just very quick math, right? If you have 100,000 Bitcoin in a quarter, and that puts them then at 900,000 Bitcoin, right?
No, so right now they have about 760,000.
What's about
Right.
closer to 800,000. So
Right.
7.
So let's just assume next quarter they do in Q2 they do another 100,000,
Yep.
right? And the price goes up, helps everything. But let's say they end this quarter at whatever 775.
Yep.
Well,
Then
at the end of Q2, they're at 875, and then basically in the third quarter by September they could be at a million Bitcoin.
But what if it accelerates? My prediction is July 4th, 2026, they'll be at a million Bitcoin. That's pretty aggressive, right?
I mean, that's pretty great. Is it possible? Sure, it's possible.
Yeah, if
Sure,
the price
if
keeps
Bitcoin
stopping
picks up.
sideways.
Well, this is the craziest part is that Strategy acquired the most Bitcoin when Bitcoin, well, it was the second highest price. I just posted a chart on this, but in Q4 of 2024 with almost 200,000 Bitcoins, it was 195,000. That's when Bitcoin went from 60 to 95,000. So this is counterintuitive. Strategy acquires more Bitcoin as the price goes higher. And that's why this is setting the floor that in a bear market it'll be it's already their second best quarter ever, and the other thing, it's not like it's the second best quarter and it's 8,000 bitcoins. It's almost 89,000 bitcoins in one quarter. And so some guy, so I just look at this very positively because I look at the data and I use the data to determine whether I should be bearish or bullish. And I think my outlook is bullish. I know my outlook is bullish. And anybody wants to refute me, give me some math where it's bad. And the fact that we've got Strive and even Metaplanet, right? Am I happy with Metaplanet stock price? No. But they're open to the capital markets and you're continuing to move along. Strive is executing. Strive completed their Semler acquisition, and they completed that. They got SATA out. They bought STRC, right? And then they bought more Bitcoin today. So, the capital markets are open for the companies that know how to use them.
Yeah, we've come to learn over the last 6 months that there is no clear definition for what a Bitcoin treasury company is, right? Because I always throw out the thing that who's the biggest Bitcoin treasury company in the world? It's Tesla. It's the biggest company with Bitcoin on the balance sheet. Oh no, you have to have all in on Bitcoin and you have to be doing financial engineering. Okay, well then it's Strategy. Well then how many companies are there like that? Okay, well there's Strategy, there's Strive, there's Metaplanet. There's not that many, and we all kind of agree there's not enough space for hundreds of these financial engineering type, Bitcoin balance sheet companies. There's only going to be so many of them.
I mean, I disagree with that, but go ahead.
Well, yeah, I know. Yeah,
you can have different, not just different operating companies, but just different strategies that some of which have not even been done yet.
Right, but
so let me give you an idea, Ed.
Yeah.
So I think the way that this is going to play out is, I think Strategy is going to hit a million Bitcoins, whether it's July 4th or September. That's going to happen.
September 17th, during the unconference in New York City.
Okay.
Those two dates are going to happen.
Okay. So they're going to hit a million Bitcoin. Okay. And what I think is going to happen is it's going to get harder for them to buy Bitcoin because the price is going to rocket up. And what's going to happen is you're going to have a bunch of smaller Bitcoin treasury. For instance, DDC. They acquired more Bitcoin. The announcement came out today. Norma, right? They acquired more Bitcoin. I think what's going to happen is the smaller companies, Bitcoin's going to reprice. I think it's going to happen within the next year, based upon the math that I posted. Why do I think that? Not only is Strategy trying to get to a million Bitcoins, the same thing for IBIT. They're basically in a dead heat, and IBIT is higher. So you have two groups that are shooting for a million Bitcoin each. Now, the problem, IBIT sells and buys, depending upon what the shareholders want to do. But I think the smaller Bitcoin treasury companies, when Bitcoin ratchets up to 150, 200, 250,000, 300,000, $400,000, then they're going to be like, wow, I wish we could have bought more. For whatever reason, they can't right now. And then all of a sudden, they're going to be like, well, they're way ahead. When Bitcoin goes to $400,000 or 300,000, somebody's going to wake up and be like, oh, I guess I should go buy a lot of Bitcoin, when they know now it's at 70. You know what I'm saying? Those other companies that got in there, I'm on in Tim's side, that these companies are sitting on an asset that will rip higher in the next year, and the follow-on companies will be like, we're late.
Yeah, a good friend of mine from high school is a pro golfer, and at the time when Tiger was winning every tournament, right? Every tournament that he was in, he would win. I asked him, I said, well, aren't the other golfers at that level? I mean, aren't they like despondent that they can't win? And they're like, they don't care at all. There's so much money coming into golf that now, as the 10th best golfer in the world, you're making so much more than you were before Tiger was there, bringing all this money to it. And even the golf pro, who now has all these people that he's giving lessons to because Tiger has created all this interest. I'm not trying to equate strategy to Tiger Woods in golf, but there's this idea of, the rising water lifts all boats. It's just, I've been through 4 of these cycles, and at times like this, when we're down after a high, God, man, people's psychology just gets so battered that we have a hard time. We know that it's going to go there, but you're sitting here in the meantime going, when, and it gets tough. So it's just like, you got to be able to have that patience and persistence.
I want to give some people some bull thoughts. I know I don't want to make this just about strategy, but when strategy went into Q1, January 1st of 2024, they had under 200,000 Bitcoins. I mean, this is historical information.
Yeah.
And then in that year, right, they ended the year at 445,000 Bitcoins. They acquired more Bitcoin in 1 year than the previous 3 years. And in one of the quarters, obviously it ramped, but that's when everything changed. And so you have the inflection point, and then it has dipped back down. Now it's coming back up. And then I like to use the word equilibrium. So right now we're in this equilibrium. They're the buyer of last resort. And somebody said to me, I said that the price would be much lower if strategy wasn't buying. And he's like, well, you don't know that. I was like, okay. And then he proceeds to tell me that these OG guys have been selling tons of Bitcoin. And so my response to this person and it's always somebody with less than 300 followers. And then I said, okay, so if strategy wasn't buying, do you think the price would be higher or lower? And he didn't respond. Of course the price would be lower because you'd have more Bitcoin. I mean, it's the supply and demand thing. If you have more supply for, a given demand, the price drops. And on the flip side, we expect the same thing. And the other thing I want to say with these smaller companies, look, they're going to figure, why did I write the book? I talk about valuations. And somebody said, why does a Bitcoin treasury company trade at a premium? Because it shouldn't. Well, I believe it should because it's access to a capital market. They're able to access something and have more Bitcoin per share over time, right? So either you believe that or you don't. But everything either trades at a premium or a discount. Everything does. If you go in to buy a car and they're giving you a discount, that means they have a lot of those on the lot and they're trying to get rid of them.
Yeah.
Right? But if you want a fancy version, look, I bought my dad a Toyota Prius, right? I had to pay $1,500 over list price on it. But if I wanted a Camry, we can give you 10% discount off a list. Why? Because they had 50 Camrys on the lot, but on the Prius, they had 2.
Yeah.
Now, they're both made by Toyota, and in fact, they could have even done a hybrid Camry. It's the same company, same engineers. Why is one at a discount, one's at a premium? And so people are like, well, I don't see why strategy could trade, or any Bitcoin treasury companies could trade at a premium. I'm like, well, why does anything trade at a premium or a discount? It's because of supply and demand. Lots of examples. I got a Rolex watch. Not all Rolex watches trade at a premium. Typically, the solid gold yellow ones or the platinum ones of the same model, those you can typically go in and buy. But the stainless steel ones are basically, and they're all the same model number. On those trade at a premium because the demand is higher than the supply. And everybody's like, well, I have an iPhone or I have a Garmin watch. Okay. But there's a reason why. Again, it's the same brand, and some trades at a premium and some trades at a discount. And I don't know why people cannot apply that to a Bitcoin treasury company. And some companies are going to have a different flair with this. And I think what's going to happen in one year, it's going to be like, well, Strategy's run up and Strive is doing fabulous and Metaplanet has gone back up again, which is a really interesting small player that I could go buy. And I think that's how this plays out.
Yeah.
Am I bullish enough? Because
No. I think we all are. I think
No,
everybody.
you are not bullish enough.
No, you're not.
No,
bullish.
I don't know where Gladiator went, but you are not bullish enough. I mean, think about what Ben Workman has been saying for the last couple of years, which is he's looking forward to when you actually have like a growth company, think an AI company that also has a Bitcoin treasury strategy. Like you haven't seen, correct me if I'm wrong, like any, at least none that are super visible that we're talking about with an AI narrative with a Bitcoin treasury in size, maybe that's really like growth on both engines. Does that make sense? Or
it does. You know what, Tim? It does. But at Las Vegas, at Strategy World, while I was there because of the Bitcoin that they hold, there was a whole keynote that Fong did on the first day about what Strategy is doing in AI. Now, imagine that if it seems like they're doing some really interesting things with AI at Strategy, and it does not appear that it appears that I think that will be helpful. So, Ed, I think
it's not priced in.
I don't think that's priced in yet. I think that the fact that they own so much Bitcoin compared to what that generates, that I don't think it's ever going to be priced in. But I
disagree with that. I hope it's priced in at some point.
Right, I hope it is. And I don't think people understand what's going to happen with AI. And if the last thing that I would want to be doing right now is that I would want to be at a software as a service company where anybody could this is what people miss with AI. And I've said this. It's not that I can go if I'm at a company. I'm the chief information officer at a company.
Are you saying you want to be at a SaaS company?
I don't. Let me tell you why. Okay, so let's say I'm a CIO at a company that's using Salesforce. Salesforce is a company that tracks. It's a customer relationship management software that you get, and they have different levels of service, and it's priced per user. When that salesman comes to renew the contract, whether this is true or not, I'm going to say to the salesman, hey, thank you for coming. You got to renew your contract. You're giving us 10 million, 20 million, $50 million a year. I'm going to tell him, you know what? I just hired 3 college interns. We're going to replicate Salesforce here internally. And we're going to do that. And you know what? And the guy's going to be like, well, it's not certified. I'm like, yeah, I know. We're giving you $50 million. Now, let me tell you something. Let's say it's all BS. That salesman's going to go back and tell his boss, hey, this company is giving us 10, 20, $50 million. Just said they're going to replicate Salesforce with 5 interns that they hired with AI. And Salesforce or whatever company's doing SaaS is having the same conversations. Oh, crap. Give them a discount so they don't leave. Make them happy. And that's why the software as a service companies got repriced. It's not because the company is going to automatically go out there and create this, replicate it with AI. It's the threat of doing it. It's the negotiating. I go in to buy a car at the dealership. Hey, unless you give me this deal right now, I'm going to go to the other Toyota dealership down the street.
Yeah.
And go leave. And the guy's got to make a choice. Is he going to go leave or not? And so that's how this happens. People forget that you can negotiate these terms.
Yeah.
And I think that's the part about AI. And then in some cases, you're like, you know what? We'll just take the base level software and then we'll use AI to write the advanced level on top of it. And therefore, you don't buy the more expensive pieces of this.
We could do a whole conference just on negotiation. Like one person might think, hey, you just walked away, the negotiation's over. And the other person thinks, no, I walked away and we are still negotiating.
Of course. Of course. And I think that's the part that people don't get is that you use the threat of doing. Now, in some cases, they could just, there's other, Salesforce has other competing companies that you could then switch to that. But you're going to use this as leverage to get a better price. And that's why I said being in a software as a service business right now is probably really tough. Adobe is a good example. That stock has taken a hit. So, but I think talking about Bitcoin treasury companies is different. Because, people have said to me over the past 2 weeks, well, what happens if Bitcoin goes to if Bitcoin's $25,000 in Q4 2027? Tim, I'll hang out with you. Ed, I'll hang out with you. But if Bitcoin is $25,000 2 years from now, something went horribly wrong. That's what I keep on telling people. Like, if that's your thought process, I don't know why you're buying Bitcoin.
It's just all the paper Bitcoin. It's not a big
It's
deal.
just, it's all the paper Bitcoin. It's all this FUD, fear, uncertainty, and doubt, right? And people psych themselves out all the time. And so if Bitcoin goes down to $25,000 4 years from now, I'll be the first person to say, hey, something went wrong. I'm doing something else.
No,
But I think that
I don't think that's the issue. I think the issue a couple of our guests have brought up today is that with some of these treasury companies, right? If I personally have 10 Bitcoin, I am worth 10 Bitcoin, right? For somebody to tell me, nope, your MNAV is 0.9, you're only worth 9 Bitcoin, I'd be like, well, that makes absolutely no sense. I have 10 Bitcoin. But if I have expenses every year, if I've got to pay rent and I've got to eat and I don't have a job, well then, yeah, maybe my MNAV is worth less because I've got to sell some of that Bitcoin. So my future value of my Bitcoin is not the same as my Bitcoin today because I have expenses. And what some of these treasury companies have done is put themselves into a place with different financing structures, a team of people making $300,000 a year, private jets, whatever, where it's like their ability to increase their stack or increase their Bitcoin per share is not sustainable. And that's kind of the fear, I think, is that so many companies came to this so quick that, yeah, some of the chaff's going to fall out here. And a price correction was exactly what it took to do it. If we would have rallied to 250, 350, yeah, you would have seen 400 more companies, but we didn't. And now you're seeing the ones that didn't have a sound business model struggling. And that's where, yeah.
Sure. So make sure you can hear me because I made sure this microphone's working. So hopefully you can hear me
Yeah,
fine.
yeah, we got you.
Yeah. So look, that all happened. Water under the bridge, right? And
yeah,
and again, things could trade at a premium or a discount. If you don't like that, don't buy it. But the reason why anybody buys a Bitcoin treasury company, and really the company that have done the best with this is Strategy. And Metaplanet has done this also. It increases the amount of Bitcoin per share. And so this is the accretive dilution thing. At some point, right, for Strategy, it will happen sooner than the rest of them because they have the best Bitcoin per share number because they have the most amount of Bitcoin and the least amount of shares floating. So from that perspective, they will reap the biggest rewards for that the soonest. But again, 2 years down the road or 18 months down the road, when Bitcoin is $200, $300, $400,000, those smaller companies, because they're a smaller market cap, people will jump into them because that Bitcoin will ratchet up. And I think, is 10 Bitcoin always 10 Bitcoin? Sure. And then you just price it in whatever dollars, whether it's Turkish lira or Argentine pay, whatever it is. Look, I heard the second guy you were talking to, Tim. Sorry, I have a little
attack dog.
Attack dog here. No worries. No
it's
worries.
The Bitcoin puppy.
Yeah. Yeah. So look, he was saying what
Are you
he
talking
said
about
was
Knut Spanholm?
Yeah, the guy that wrote the books.
Yeah, Knut.
Okay. He's like, look, I believe people should buy Bitcoin, self-sovereignty, understand how to do it, run a node, and verify your Bitcoin, and have your hard wallet. Yeah, I get it. I could take the same stance with somebody that owns a Porsche. If you have a Porsche and you don't do your own oil changes and you don't take it to the track to see what your lap time is, and you don't drive it the way it should be, then you're not really a true Porsche owner. Now, if I said that, people would be like, nah, I just want to drive the Porsche, go down and get my groceries on the weekend. I'll take it for a nice drive on the coast. Both of those are fair uses of the same car. And for me to say that about you're not a true Bitcoiner unless you buy the Bitcoin, run a node, and put it in a hardware wallet. It's just, I get that he likes to do that. But what I typically say to those people is this. If you do that, God forbid something happens to you, is there anybody that has access to your computer, your password, knows how to access your hardware wallet? Could they find the little USB drive? Do they know how to plug it in? Do they know how to type this in? And I've received so many messages from other Bitcoiners that have tried this as an experiment. Hey, I can't talk to you. Here's a written list. Here's the USB drive. Go see if you can access the wallet. And I heard from so many people said, yeah, we've tried that experiment and it fails 100% of the time.
Yeah.
Not that the software doesn't work, is that the other person's like, I have no idea what this is.
Yeah.
And you think about what and so what's the benefit of a Bitcoin treasury company? In your accounts at a brokerage house, you just set a beneficiary. God forbid something happens to you, the beneficiary gets the access to the account.
Yeah, I've seen a lot of different products trying to work out this problem with the beneficiaries of Bitcoin, and nobody's figured it out yet. It's kind of complicated. There's one guy that said, here's 7 Yuba keys. You give these 7 Yuba keys to 7 relatives, and I'm just like, no, come on, that's not going to work.
Let me look. If I gave 7 Krugerrands or $20 gold pieces to 7 relatives, hold on to this and give it back to me,
Yeah.
they would all be lost. It'd be
They'd
like,
all lose them.
They would all lose them, whatever they're worth each.
Yeah.
So look, guys,
Okay.
I want to wrap up and say, look, I'm bullish about this. The metrics, my posts for the past week or two, I've been on 10, 15 hours of spaces talking this over. And I think the Bitcoin treasury companies, I think obviously some are doing a lot better than others. I think the other ones, as you said, Ed, a rising tide raises all boats. I think that we're going to look back on this in a year from now and be like, oh, these were a couple of gems in here which reemerged. There were other ones that could not improve, right? And I think that the marketplace, I think it's going to be much different. And what I can guarantee for everybody is that it's really hard to plan for the future, and it will be much different.
Perfect. Mike, thanks for your time. We'll be in touch.
Great to see you, Mike.
Thank you.
Okay, well, that wraps it up. Tim, I'm going to jump off. You want to close it out?
Let's close it out. Thanks, everybody, for watching the March 2026 Bitcoin Treasuries Digital Conference. Reach out to Ed Julien, myself. We'd love to connect with you. And I think we're going to hit the reel one more time. Thanks to our sponsors. Thank you to Salt Lending. And welcome to the Bitcoin Treasuries Digital Conference, presented by Salt Lending for March 19th, 2026. Today, we're bringing together leaders, investors, operators, and analysts from across the Bitcoin Treasury ecosystem to explore one of the most important shifts happening in global finance, the rise of Bitcoin as a corporate treasury asset. Over the past 6 years, we've seen a growing number of companies adopt Bitcoin on their balance sheets. From public companies to private firms, a new financial strategy is emerging. One that combines traditional corporate finance with the long-term monetary properties of Bitcoin. Throughout today's conference, we'll be speaking with executives, investors, and industry experts about the strategy behind Bitcoin treasury adoption, risk management and corporate governance, capital markets and Bitcoin-backed lending, and how companies are thinking about Bitcoin as a long-term reserve asset. A big thank you to our presenting sponsor, Salt Lending, for supporting this event and helping to move the Bitcoin financial ecosystem forward. Before we begin, a quick disclaimer. The content shared during this conference is for educational and informational purposes only. Nothing discussed by our speakers should be considered financial, investment, legal, or tax advice. Please do your own research and consult with professional advisors before making any financial decisions. Stay with us. You didn't build a Bitcoin treasury to sell it. You built it because you understand sound money and you plan to hold through cycles, through noise, through everything. That conviction is the strategy. But growth doesn't wait for the perfect exit window, the deal, the expansion, the next move. Those opportunities are now. Salt lets you borrow against your Bitcoin and fund what's next without touching a single sat. Your thesis stays intact. Your business moves forward. Talk to the team at saltlending.com, built for companies that think in Bitcoin.
We're Giga, a Bitcoin Treasury company turning digital assets into real-world innovation. We're changing the U.S. building envelope market with high-performance facades and windows using technology and AI to power advanced manufacturing. With over 30% annual growth and strong margins, we're scaling with vision and innovation. Stacking Bitcoin since 2021, driven by our deep belief in it and a mission to become one of the top global Bitcoin companies. Discover what we're building next.
Spreadsheets, CSV exports, blockchain explorers, tax, season, panic. Sound familiar? Bitcoin accounting doesn't have to be chaos. Bitmint is a Bitcoin native accounting infrastructure. Connect your wallets, transactions import automatically, cost basis tracked to the lot. Bank-style statements and tax-ready reports. Bitmint, clarity from day one.
There's a new way to retire. With Bitcoin IRA, you can invest in crypto 24/7 with tax advantages, giving you more ways to diversify and grow your retirement savings. Choose a traditional IRA to defer taxes or a Roth IRA for tax-free withdrawals later. Either way, you can grow your portfolio and pay less in taxes. Setting up your account is fast and easy. It only takes 3 minutes to get started. Take control of your future with Bitcoin IRA.
Everyone should be able to save and protect their wealth across generations. We built this company so billions of people around the world can take control of their financial lives. We've reimagined savings and protection from the ground up with digital money and modern technology. We're the world's first Bitcoin life insurer. For the first time, people can save, protect, and pass on their wealth entirely in Bitcoin. 4 years ago, we started working directly with individuals. Today, as the Bitcoin economy has grown, some of the world's largest and most conservative institutions are joining us in our vision. Every economy is built on patient, long-term capital. Bitcoin is the foundation of the next phase of global finance. We're not just building a Bitcoin company. Meanwhile is the backbone of how everyone will save in the future.
Football Tech, where soccer and technology meet the power of Bitcoin to transform the future of vulnerable communities. This is what Bitcoin philanthropy looks like. Soccer, technology, and Bitcoin. Join the mission. Help change the game at footballtech.org/Bitcoin.